privately held companies in the tech world that could, and if they do come to market, would seemingly signal a pretty big like regime shift. I mean, and to your point, if you start seeing IPOs come in and do really well while we're at 5% 2-year rates, that would push against a lot of the bear case that the higher for longer situation and policy would be enough to keep the market under pressure.
This is an interesting conversation, Oliver, because inherently we think of interest rates being correlated to stimulus and stimulating of the economy. But if interest rates are higher and the market can handle higher rates, it just inherently means the market is stronger and the economy is stronger. Yeah. You cut rates and bring to zero when things are struggling and they need stimulus. So rates, I think, are actually more correlated than you think to a stronger economy.
Well, historically they absolutely are. There's no reason why rates going up has to be bad for stocks.
And also, not all IPOs are going to be equal. We'll see if Instacart can be ARM.
Right. Okay. Well, it's not quite as, it's Instacart. It's fine, but it's not like that exciting. I don't know. Maybe it is kind of changing the world. I don't use Instacart, but I know people do. Okay. Thanks, Alex. Nice thoughts. Appreciate it. Host Next Gen Investing. When we come back, let's talk some more chips and those connected into the auto world, which had been really the big clear winners within the semiconductor space. We'll do some trading when we come back.
Good morning, September 15th. We're streaming stock market today, trading stocks, options, and futures. You're watching SPY, BBBYQ, AMC, ACB. Wheat stocks are pumping. Look at FI, man. That's so annoying. They literally stopped me right here. That's up 13%. I had a big range on there too, unfortunately. Because I bought in like here. Volatile, so pretty big loss from here to here. Would have been green. Oh well. Yeah. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at HappyMoneyYT. We have a Discord server, link for both those in the description. You guys are having a good morning so far. We're about 30 minutes into open. Buys, pre-market sell-off, and sell-off after the bell. I don't think we have any economic data today. Is quad or triple witching? I don't know which it is. Lots of witches. Oh, U.S. import prices. We did have data at 8:30, I guess. Yeah, enough to move stuff around. U.S. import prices, Empire State Manufacturing Survey. And then 9:15 we had industrial production capacity utilization. Consumer sentiment prelim is at 10. So for FI is up, ACB is up 8%. Barbecue still kind of in its barcode range. Wide spread. Oh, General Motors popped up there. GME is flat into its resistance area. Morning human shop rag. Buyer's not going through yesterday because it was on expert. Is it not on expert now? I think they're still not able to buy if it's still on expert. Some brokerages you could buy on 2 days ago. But then I think yesterday maybe they all got the kibosh. Morning, Christopher. Morning, Macaron. So I don't know. Are you still unable to buy it? Assuming. Looking for calls here, but we'll see. It's around VWAP, so the VWAP chop scares me. Alright, I got some calls. Did it. And immediately down. We'll see if you get a bounce here. Can't believe FI 12.5%. This stock. Just enough. Wop chop is happening. C is up 14.5. Some consolidation. Well done. It's just another less regulated market, even than OTC. So for stocks that are in OTC that are delinquent on filing, they kick them to expert, which has even less rules and even more sketchy. So it's actually locked out to most individuals. It was created back when we were buying Sears, when GME investors started to learn about zombie stocks all floating around on OTC, and how they were using them as they were seller boxed them. And so we started buying them on OTC and causing crazy price action. And they immediately, basically, that's when they came up with that and shut us out. So, yep. So they can continue to play the seller box game. Aloha, Maui. So yeah, you can sell. You're basically you're locked in at this point to whatever. Potentially it'll come back on OTC around the same price, but I could also see it not. It very well could just be locked there, and wow, that's a big red candle. And then come on the other side, much higher price of a maybe different ticker, or they're just worthless. Buy, what the heck? Well, didn't hold above you up. BFS up a little bit, 0.3. Kind of weak. Kind of weak VFS. AMC doing? AMC's up 1.6. Clicker. lot. Line coming down more. Maybe double bottoming there, but I'm not so certain. I up 12.5, and you guys still in FI? There's a new low on SPY. Aloha Maui. Great. Thanks, Maui. I agree. I sold barbecue a bit ago. Yeah, I was just kind of trading it, so just watching the technicals. Last time I sold it, I don't have a line there anymore, but this trend, when this trend broke, I sold it right here. So it popped back up a little bit and then pulled off from there. Probably, I mean, I don't think I even can buy it in right now, so I'm fine not having exposure. Yeah, maybe it'll go crazy, maybe Ryan Cohen's involved, and but yeah, it's kind of a gamble. I don't have a whole lot to gamble with at this point. So you get better at day trading SPY, then I'll have more to gamble with. You low there on less SPY. What you got going on? There is a gap down there. It looks like it's trying to fill. So not good for calls. What's up, Guts? I saw an article Nicola's starting to deliver their hydrogen trucks. True. Semis. Then I saw a video the other day of them like driving them around the track. Actually driving, not rolling. You guys see that one circulating? On expert market, it's even way more liquid. So price might appear to be up here, but it's just a huge spread. So it could next trade transaction could be down here like 16. keep that in mind when you see the ticker. This ticker, I don't think it doesn't really matter to you guys anymore. You're holding barbecue shares. Just becoming its own. It's either a phoenix or it's just dead. Probably that weird spike on VWAP. How bizarre. Yep. Almost 1%. Bounce on VWAP there. Run is up 0.5%. Dish is pretty much flat. Squares down half. Close out of those calls for now. Might be getting back in them, we'll see. We'll pop up there on GME. 0.7. $18.47. We'll see. See what it brings. Yeah, CGC is up 12%. Hey, Sergeant. Barbecue, is it not really pumping? It's just widespread. Not going anywhere. Yeah, that's true. Nicola gapped up though. That Mullen yet? Oh, nice Mullen. Mullen, 15.5. Lucky, lucky, lucky. That move on Mullen. Impressive. We've gotten back into FI, I guess. Oh well. Oh well. ACB's working. GME is butting up against that resistance. Getting close. It's coming down some more here. Buy wants to finish that gap fill. I'm gonna start scaling back into calls a little bit, very slowly. You picked up a put for Bubba. That's so kind of you. We're downside? It's starting to slow down. Our lows weren't quite as low, as steep here, so could be starting to round out here. See this next move down where it tests. But yeah, it seems like it's maybe slowing down to back up for VWAP or even a eye of the day test. Forming a little cup here. Yeah, I have some exposure on AMC. I guess I have those calls in the long term, so consider selling those. Let's do one more little test down here. Maybe double bottom. Is arm up some more? More continuation? Yeah, they didn't price it too high, so that's good. I have a skewed perception of IPOs because I traded them a lot in 2021, where they were all opened up like 100, 150%. And trade around and sold off. So yeah, this is probably more how an IPO should respond. If they don't price it too high before they release it, then this is good. This is a healthy priced IPO where it has buying strength. That's good. GME up 0.8. Can we get rid of this thing? Distracting. Getting one more call there. And then once we have confirmation of a reversal, I'll add a larger amount. What's old GNS doing? Back to $1. Back in that buying range. Buy 18%. You bugger. I mean, it's probably going to retest the high of this pre-market at least. It's the least that it could do. When the stop losses sting. Stop loss sting. Give me a little pop. Yeah, see, it was... That's a big resistance level. Oh, it's not quite above that secondary one. That's that first one. That doesn't the second one. AMC is red. 0.5%. Nice, Busy B. Well done, man. Yeah, Mullen's doing really great. 23% is amazing. Looking nice. Don't forget to take profits on Mullen, too. these wicks down here on SPY. Yeah, I'm on 22%. That was our next resistance right there, huh? Yeah. 90 cents, I mean 89 cents, you kind of have some room. Wants to keep going. We have a gap it left down here. Now this is trended up though. At this angle, it's higher low, that higher low, and it's slowly gotten more aggressive. This trajectory. Very nice. If I did break that high from the day, like right at that high. Oh, it is, it's above it. So next stop on 5 would be six bucks maybe? Out of that $100 high. GME rejecting that. Thanks, Lark. Appreciate it, man. You can't sell, Mullen? Okay. Suat? Yeah, very likely. I mean, the company's been liquidated. Can't sell it. I mean, it looks nice. I understand. Not wanting to sell it. Honda's down 3%. See if it'll get a bounce on this level down here. High coming down some more. Pick up another call there. It looks like it wants to fill that gap. I could use another little pump on VFS. That'd be neat. So wait, it's not canceled till it's canceled, right? So whatever value the one that wants to buy it gives it is what it's worth. Price doesn't keep going up; it's just gone down. But also, there's a huge spread. If you actually wanted to buy it, you'd probably have to pay 20 cents. If you actually want to sell it, probably couldn't get more than 16 cents. So you're seeing the illiquidity. This doesn't mean a whole lot anymore. Price. You just got puts, Bubba. Looking for that gap fill or what? Nice, Sergeant. Well done. Mullen. Yeah, I like... Mullen's run up quite a bit. I kind of double top there, but... I do like Phi's chart. Maybe better. Hasn't run up as much. Or some of these weed stocks like ACB. Nice big bull flag up here. Unless you wanted to like scalp trade Mullen. It is ripping still. Exactly. And everyone says, oh, price doesn't matter. What you're actually seeing doesn't really matter. There's your little flush on SPY. Cash account, 3 trades in a 5-day period. I clicked on a cash account, now I can... no, cash account you can day trade as much as you want. You can only trade with settled funds. Three trades in a 5-day period is with a margin account. I missed that dip by. I think I might fully fill this gap first. I'll have better opportunity.
Fall from grace after $100 was the 2021 high, and expectations they'd be able to thread the needle in the workout business world. This is now the lowest, basically, other than the COVID low. Let's bring in our market meetup panel. We got George Tillis and Scott Durfee joining me this morning. George is our senior markets correspondent. Scott's the senior manager of trading and education. What's going wrong here this morning, Scott? We're having a little bit of trouble.
Well, here we are. We're in September. We've got a couple of things working for us, but we've got a lot of things that are also kind of creating some headwinds. We've come off a pretty soft week. We have federal market committee stuff still looming. And I think that we're kind of just waiting for the next shoe to drop in that area. We're anticipating no move from the FOMC this time around, but what we'll be doing is really listening, and traders and investors are really going to be listening hard to what Jay Powell has to say at the conclusion of these meetings, listening for hawkish tone, listening for dovish tone, listening for some clues as to maybe a potential pause in the very near future. And I think, based on some inflationary print that we received this week and a few other things, I think that, all eyes are kind of just going to be focused right there right now.
George, when we get stocks fading like this, bonds selling off, and actually a data point that was a little bit soft with the sentiment number this morning, that seems to point to some pretty strong conviction among bond bears able to sell bonds even after that number. What do you think?
Well, I think, consumer sentiment is probably going to be soft coming up. From what I understand, student loan payments or repayments are starting in October. I think that's going to be a drag on the economy. I think that's a fiscal drag also, essentially, from the standpoint of, the money going towards the government versus the government actually spending money, which still, in my view, is one of the reasons why, or if not the primary reason why, but considering the fiscal deficits we've been running this year, have really offset tight monetary policy. So I think we're moving into that portion of the year where, again, those student loans are going to be starting to be due. The other thing is the continuing resolution with the budget. That's going to be a hang up. I think the market's hung up on that as well. I think we're in a distribution stage still. I mean, if you just you don't see it. If you look at VIX, it's very low, but I follow intraday volatility. It's extremely volatile on an intraday basis. So it gives you an idea that those who are purchasing are basically scalping. Distribution essentially is buying, and of course any movement to the upside they're selling. So there's no conviction to really hold equities at the very least from a near-term or short-term perspective. Profit-taking opportunities are abound, and I think this is the market we're in probably in the next 4 to 6 weeks, considering all of the seasonal issues, the fiscal issues, and the uncertainty around the Fed. Which, again, as we talked about on Wednesday, I think they're in a good position where they're at. They're not going to move on rates in either direction. I think it's the right policy.
Got some more calls there.
But I think the fiscal drag right now will be front and center of something we'll probably hear more in the news in the next couple of weeks.
All right. Next week, though, we already know the outcome, Scott, or could the language around the FOMC be market moving?
Well, the language could be market moving, but I think we do know the outcome. The outcome, in terms of the decision, I think is pretty much a foregone conclusion. The futures that kind of predict that, the CME, we're not going to see a bump. But come November, all bets are off, and I think we will probably see one there. The thing that you mentioned, the thing that we need to be paying attention to is what they say after the meeting. You know, all the rhetoric around it. You know, are we going to be leaning hawkish? Are we going to be leaning dovish? I don't think so. But these are the things that we're going to be paying attention to, and that's what'll move the market, not actually the decision. The decisions, I think it is a foregone conclusion.
How strong do you think language could get from Jerome Powell at this point, George, with the move we've seen in commodity prices particularly? Does that force him to try and strike a little bit more of a hawkish tone?
No, I don't think so. Honestly, unless we see, oil prices remain high, I would say between the next 3 and 6 months, there's a potential for, contracts that are negotiated by commodity suppliers. And of course, those used commodities where they actually reset price contracts that are higher. And I think that'll manifest into higher core inflation. So I think if you look at the core inflation, it's relatively stable. It's starting to what the Fed is looking at. So I don't think they're gonna change their language very much at all. I think their policy condition, like I said, is very balanced right now. It's still very restrictive, but again, I think they need to do that because I think core inflation is going to take a long time to get to that 2% level, if not maybe until we actually see a recession. But I will say this: looking at it from a technical standpoint, I know we talk about fundamentals mostly, but if you just look at the weekly charts as well. You basically have 2 inside weeks, considering this week, if we do trade right around where we're at right now, and last week relative to the previous 3 weeks. So when you have consecutive inside weeks, you typically have what's called a breakout mode. Now that means the market could break in either direction. And I think right now, with around 4,500 on the S&P, that's the midpoint of a trading range between 46 and 4,300. So I think it's a 50-50 right now in terms of directional bias, at least in the near term.
I like that. Little breakout potential, little coin flip action. While it fits,
Yeah.
Market putting odds of a hike at roughly a coin flip by December. Scott Durfee, as far as our market response day 2 with yesterday's big IPO, a little bit disappointing perhaps?
Sometimes these are, right? And more, I don't know if it's true that more often than not they are, but I don't know. I think that we're seeing some strength, and you can't fight against the strength, right? You don't fight the trend, you don't fight your friend, and I think the trend's moving in the right direction. So I don't think that we're going to fight that one.
I'm going to go with that one. I like that. Don't fight your friend, don't fight the trend. I appreciate it. Thanks, guys. Scott Durfee, George Tillis. Nice way to close out our program here this morning. Thank you for joining Morning Trade Live. I'll see you this afternoon at Market on Close, 2 p.m. Central Time. Trading 360 with Nicole Petalides is
Yeah,
up
settle
next.
cash.
Markets,
With options trading, it's nice
closing
because
out the week too strong
options
right
settle one
now
day.
as we
So
have softness across all the major
that's why
indexes.
I'm trying to do it on this
Nasdaq
small
down
account.
more than 1%. I'll see you this afternoon.
It kind of keeps you from over trading too, because the cash I have available to me in the day, that's all I can use. So every time I enter a trade, that cash is gone then until I close that trade and it's the next day. But it comes back the next day. So if you're $1,000 being the day buying power, if you're just trading options and you're out of them by end of day, all of that buying power will be back the next day to go again. With shares, you have to wait 2 days. So if everything's closed out today, it wouldn't be till Tuesday that you could buy back in or use that buying power. Oh, SPY filled the gap. Has been filled. Kind of surprising, and it's bounce right here. So, let's see, kind of average into calls. Might start flushing here actually. Maybe more so than here. Then we're looking at 443.75. Interesting. I might have to cut out of these. I want to close them, so that's right. Today's ex-dividend day too for SPY. Very interesting. SPY come down more. It's almost down 1%. Wow, yeah, flushing. What is selling off right now? Microsoft. Huh. The dollar ripping or something? Something's pulling this down. Bye. There wants to break out to the upside. Bounced on VWAP. About to make a new high there. Oh yeah, new high on FI. I can pretend I didn't get stopped out, right? Watching the gap fill come into play. 623. Oh, look at that volume on SPY. Last 5 minutes on that flush. Either on FI. Fallen came back down to VWAP. Oh, we're getting our quad witching action. Don't always have this much volatility. Witches.
Chairman last week did say there have been tremendous improvements
Jenny.
at their Arizona site over the last 5 months, but obviously not enough to appease some of these delayed deliveries we're seeing today. The company did say that when regarding some of these, pieces of news that they are not specifically commenting on, but they referred back to their CEO in July when the CEO did say that weaker economic conditions, this slower recovery in China, and the softer end market demand is now making customers more cautious and more mindful of controlling their overall inventory. So shares are down today about 2% here. Seeing weakness, though, in most of these major chip makers. As you can see, Broadcom, AMD, and Micron also lower to the downside. Another major customer, which could be impacted most significantly by these delays, is ASML, which is also lower today. So I would say this more so impacts than the several companies that TSM does outsource. Well, also, I'd say given their weakened guidance we got earlier this summer, seems like a pretty negative picture here, at least for the near term.
All right, thank you for that. Really appreciate it. Jenny Horn, markets correspondent. Let's get some insights on the news shaping the markets. For that, we welcome in Eddie Gabor, owner, Key Advisors Wealth Management. Thank you so much for being here. I mean, since we're talking about UAW, today we're seeing two of the big three with up arrows, but that's because right now you only have strikes happening, in very select locations, pretty much one location. What are your thoughts? Because right now, it's a slow going thing. How bad do you think it could be? I mean, I'm not looking for a doomsday scenario, but your thoughts.
Look, I think this is one thing that the market's just going to sit back and digest to see how long this lasts. Based on the narrative, it doesn't sound like the UAW is planning to budge much. So these companies are going to have to come to the table with a pretty healthy offer, or this could stretch out much longer than anyone initially anticipated heading into this. And that's where you can run into the problem where it spills into more and more people. And then again, at the end of the day, this becomes inflationary as well too, right? Because you can have some disruptions in production. You have folks now making less money as well too, and out of the workforce. So this is not, timing-wise, not that there's ever a good time for something like this, but timing-wise, this is really not coming at a good time when we have inflation showing signs of reaccelerating. So this is a big deal. You don't have to make a knee-jerk reaction because we are in the early innings of this, but I think this could stretch out longer than many anticipate because I think they're far apart based on what I've read.
Right,
22.5% on FI.
Meantime, tell me about the week that was and your outlook for the Fed. How are you feeling about the market?
So we got a pretty interesting setup coming into next week, right? We'll see how today closes. I think we'll see a lot of volatility today, options expiration. But, you know, the market is really going to look for Powell's direction in regards to rate hikes. I don't think they're going to raise in September. Even though he mentioned that if we saw some reacceleration that they would probably raise. But I think what they're going to do is they're going to wait, and they'll probably raise again in November. Because when you look at energy and the cost of housing and rents, I don't think you're going to see significant down drop there. So you could see another reacceleration in inflation over the next 2 to 3 months, and that's problematic. The biggest problem to me is not whether or not they're going to raise one more time or 2 more times. I think the market and consumers need to come to grips with the fact that they're not going to cut rates, in my opinion. I know people are pricing in rate cuts next year. Some are pricing in aggressive rate cuts next year. Make no mistake, the Fed has never aggressively cut rates unless they break something. So the only way they're cutting rates next year is if we're in a recession or if we have some type of problem in the financial markets that would force them to do that. Because if the economy stays resilient, labor market stays resilient, and inflation stays high, why would they cut rates? There's no reason to do that at that particular scenario.
So tell me about your advice to folks. You said you've been buying India and healthcare. We've seen a lot of growth in Japan and India in particular, and I've had a lot of guests talking about the bright spots being abroad. Your thoughts on how to go through this sort of
Bouncing a little bit here.
time?
Well, look,
I've averaged enough into the calls.
Financial situation, but for our client base,
it's
it's been
time to
nice
see if I need to
see these
cut
high
losses
yields,
up
right?
here
'Cause
or
I don't
add
actually
to
think
it.
interest
Get a
rates are high or too
reversal
high.
today.
I think they're right where they should be. We've just been so accustomed to zero interest rates that now individual investors can put money aside and get a 5+% yield on short-term treasuries and then be tactical with the rest of their portfolio. And we've been taking advantage of that. Savers are finally getting paid to wait and be patient in such an uncertain period of time. And then again, we are buying India, we're buying healthcare when we find our spots. Now, we did actually trim some India last Friday because it hit 52-week high. It's had a great month, and we wanted to have extra cash coming into Fed week because we think these next 2 weeks are going to be volatile. That could present some more buying opportunities in both of those spaces. But I think we're in the late innings of this bear market rally because I think we're going deterioration as we head into the end of the fourth quarter and going into next year.
All right, so last question is on the Magnificent Seven. Meta's off the high. I'm looking at NVIDIA. I'm trying to look for a most dramatic one off the high, but they're all off the high some, 10%, something like that. Would you say any of those names are buys at this point?
So right now on tech, what we want to see is what the next earnings quarter is going to look like. Because at this point in time, their valuations have expanded to a level where they're going to really have to put up or shut up from an earnings standpoint. They're all great companies, but I just think there's better opportunities from a valuation perspective. And frankly, I think you'll get better entry points over the next few months in that space. And because they're so heavily weighted to the market, my concern is if one of those 7 companies has a quarter like Oracle did, the downdraft that it could present in the market due to the weighting there could be very hurtful and make it move faster than people are anticipating. And at that point in time would be more than likely a time where you would start for us actually putting an entry point in those names.
All right. Thank you so much, Eddie Gabor. Great to see you, Key Advisors Wealth Management.
Thank you.
Thanks for being here. Plenty more to come here on this Friday. Trading 360, the big 3. 3 stocks, 3 charts, 3 trades. Then Lichtenstein goes to the technicals. Tom O'Brien takes
She
us
still
into
has that
trades
China cough.
for Amazon,
Got the cough drop in there.
AT&T, and Barrett Gold. Next on Schwab Network.
It's crazy. We've got a big inverse cup here. Might see new lows before we get our bounce. It does give us the handle. This could be low enough too. Day of the day. It's not broken out. It's found its resistance, so probably a good opportunity to short it. Yeah, this doesn't look like the bottom. It's like SPY's bear flagging now, so might fully find the bottom of this cup. Just this channel that it's kind of resisted since 629. Tested it here. Tested it many days for that 30 days there. Then it got steeper. So this one tested a few times. We broke out of that resistance. So either consolidating or reversing. Next one would be here. So today's high was basically right at that resistance, real close to it. Did it there. Broke out of it there, but just wicked. Here's the lower one that initially had. And then I just put another one on the higher. The very high. That. Also this one. But yeah. Need to trade up in this range right over here. This is the pocket, and then you'll have a nice inverse head and shoulders, and you'll be above that resistance. So to go long, I would wait for more sideways could work with a little bit of upside. Or you can take the short here and have a stop for out here to then flip long. $11.15. Dang, these options are gonna get just data slapped.
Well, it's taking a hit off the highs that we saw earlier this week, but still in a longer-term trend up off the lows that we saw months ago. Taking a look, first and foremost, I started off with a bit of a more granular time frame, and you can see in this chart a pretty well-defined trend to the upside here, going all the way back to, we'll call it 135, and the run-up that we saw this week to 146. But you can also see, in addition to that trend up, how we're kind of
ECB popping up there
here a little bit, right, and starting to roll
into the highs of the
over.
day.
You can see as we establish this 145
The 5
consolidation,
bull flagging at the
focused on
highs.
142 level. We've now taken that out, so basically invalidating
Falling
the
below
market
VWAP.
assumption that value's moving
Does have a
higher
gap down here
on
now.
this 15-minute time frame. Now we always talk about the more granular and how you can oftentimes get shaken out of a trade on a shorter time frame that's still a valid one on a longer term time frame. In this instance, I've got 4-hour candles going all the way back to the beginning of May. You can see the bullish sentiment here as areas of value continue to form at higher and higher levels. Again, we were just talking about key areas to watch. Well, in this instance, 138 is the significant area.
Top of trend line for AMC.
Right now, around 143.
AMC hasn't really
you can see the movement we just looked at off that high
set a trend yet.
And how we still have yet to take out a key area. And again, this is now based
got
on a
course like
4-hour
resistance.
time frame. This method of kind of determining
135.
trend and determining whether
That's that Weeble though,
mindset
so
is right or
I'd say
wrong,
probably
the
just this support right here.
validation process.
Next resistance.
It really is one of the benefits of looking at price activity through this lens, through the
But yeah, what we're looking
lens of
for
option
is
market theory
basically to see if
concepts
we
and
can build
ideas,
a
but
cup.
also, the one thing I like about it is it
Complete that
helps us
gap.
determine not only when a trend is present, but when
if
one
we
is
make
no
a-
longer present. In this one instance, we had a very
hit
well-defined
resistance
trend to the
here,
downside. You can see how
or even
anything
here,
above
you know, it's not good.
123 has very much been, well, bullish and
We can come down, but
invalidating that,
can't
longer-term
make
trend that
lower
had
lows
been
basically than
lower
this.
into the beginning of this year. We bottomed
Or it's
out
not.
down around this $80, $90 level, and
Not
it's
a
been
nice
off to the
trade.
races since. Again, everything above 123 has been bullish.
Right, understood. Okay, so as you look at these charts, I mean, this is a pretty good looking
if this
chart.
is the high
Some
there
of them have been,
temporarily,
like,
which we could
at the
put that in
lower end and flopping around.
for
I mean,
now.
this one
See
came
if it
off the
lasts.
lows, it's coming back up there.
That's what we're looking to break to the upside.
This is, you know, if I take all three equities that I gave you today, I made a different mix today because of the fact that I think the market's in a consolidation. So
I don't
if we
think
go
this
to
is
the
necessarily
bottom
the
of
high.
consolidation,
We're just gonna
you know,
consolidate
like,
a little
even
bit.
like Amazon will get hit. That's why you see I kind of mixed this up out here today because as Ben says, you know, it's like, okay, it's at the top
Nice
of the
mine's bear
range.
flagging down
The
here.
real question is, are we going to
Dang,
stay at
new
the top
lows.
of the range in the market? And if we do, great, this thing will keep going. If we come down to the bottom of the range, well, Amazon, that's why I put the stop so close. You know, Amazon can get lower pretty quick. You know, that's how it works.
Right. How about AT&T? I mean, this one has been such a disappointment, hit a low of $13 not that long ago. Your thoughts? I mean, it was a dividend payer forever. I think they're back with the dividend now. Your thoughts on this one?
Oh yeah, this is definitely a trip. So you get Marvell, right? AT&T, you're trading $15.24. You can buy it here. You know, put a stop at like $14. I think $17.66 is game here. Now, this is at a 28-year low.
New
So
highs
if
there
you
on
get this
ACB.
right, you know, this is a decent
Oh yeah, this
deal.
thing, look at this, isn't that awesome?
They are paying a
I love that.
7.5% dividend. They have a $16 billion cash flow. You know, so, you know, technically you are bottom fishing here, you know, but I like what it's done. You know, it had a hard bottom, came off the bottom, had a couple signs of strength.
$1 on
even
ACB.
yesterday, had some good volume in it, and you can see in a
Pretty big
down day, it's
psychological
even,
level
you know,
there.
up 16 cents. That's not a lot, but it's not bad for a $15 stock. And so where I'm bringing you there, where that, you know, the 1766 level is the last place that you really had some heavy damage outside of the bottom. So most times when that happens, you'll come up to that area, then you'll go sideways for a bit and see if you can make it through it. So I think you have two different things here. You have a good trade, and you very well might have a bottom, and you're going to get a dividend simultaneously.
Right. Okay. Well, we'll watch that $17 level and see if it can, you know, putz around in there. Ben?
Well, the trend has definitely been to the downside, trying to recover right now. Back above 1440 is encouraging, but as long as we're below 1550, really no invalidation that the working assumption is that value continues to form at lower and lower levels, and that we're trending lower on multiple time frames. That's what's really convincing here, Nicole, and that's why even in this more granular time frame, still giving the benefit of the doubt to the bears. You can see a trend to the downside. You can see 3 areas of consolidation that formed at lower and lower levels. You can also see how we're coming off the lows from the middle of July around 1350 back up to this 1550 area, but we've yet to take it out. We're currently balancing around 1440, and while that happens, again, we're always referencing the prior area balance relative to the one that we're currently forming. The bears want to see this thing take out those lows from July in a vertical fashion, then form a new area balance, a new area consolidation at a lower level. That would validate the working assumption that we're trending lower. Now, this is the 1 hour time frame. Let's take a step back. I want to show you the daily candle. Similar pattern playing out, right? Well-defined trend lower. We've got 4 areas of consolidation that are easily identifiable. And in this instance, we're balancing again around 1440, but because we're looking at a longer term chart, you've got 19 as kind of that threshold, that line in the sand. The bears, I should say, don't want to see it above that, but everything below it right now, again, kind of feeds into this longer term trend lower. Speaking of this longer term trend lower, let's add a little bit more time on the chart. We actually have weekly candles up here, and just sort of pointing to, again, how very predictable this pattern becomes over the longer term. You can see 30, 24 in this instance, 19. We talked about the significance of 14. Here you can see 18, 19, a big area above there, but we're nowhere near it right now. And again, on 3 separate time frames, areas of value continue to form at lower and lower levels.
Right. Thank you, Ben, for that. Excellent charts. Final thoughts on this one, Tom?
No, listen, I knew this would be a tough one. I knew it'd rip this apart. My take is that, we're going to see the 1766. You get volume coming into it. It took out a swing point. We'll see what happens up there at that 1766 level. That's my take on it.
And look, I mean, AT&T has been trying to talk positively and give some positive guidance when it comes to their fiber lines, and the CFO was out not that long ago trying to give some positive outlooks. So we will see what happens there. In the meantime, gold is often the safe haven. We look at 2000.
Need Teladoc to bounce here.
Is right now, it's been around 3-week lows. Barrick Gold has been ticking a little higher, though. It doesn't trade exactly with gold. Your thoughts on this one? Because today it's at $16, Tom.
Yeah, so you could buy it here. You're putting a stop at 1504. I'm looking for this to get up to the 2075 area. So this is really intriguing. So what we had yesterday was this. The dollar broke topside. The dollar was up 500 ticks yesterday. It's been trying to get through this 104.699 for quite some time. It got through it. Gold was down $2, yet all the gold stocks were up yesterday. This morning, the dollar is down only 100 ticks. Gold's up $17, $18. I think gold, it looks to me like normally if you're going to have a big run in gold, the gold stocks move first, and that's what's happening. So you have Barrick Gold, volume came in it yesterday. We get volume in it today. You're at the 63 area. Your next swing point up there is 2075, and I think that's what it's going for. I think we have the beginning of a run in the gold equities. And, normally when that happens, Nicole, you haven't heard anything about gold equities. And we shouldn't have heard anything about gold equities because they've only been down for, a good year, 2 years. So I think it's the beginning of that run.
All right, so maybe now is the time for gold equities and watching that $20 level. Ben?
Yeah, I think he's right about 2075. That is a big level. We're actually testing a big level here right now, but this very much like what we were talking about a minute ago in terms of some of the weakness, that downward trend on multiple time frames. And well, here you can see it's playing out in this instance as well. I started off right away the 4-hour candle chart. You can see the areas of consolidation that form lower and lower levels since the beginning of May. You can see we've been mostly sideways.
Sending
again,
out
around 1675. As long as
message to the Theta Farm members on YouTube.
Looks like we're still in
Close
a
one out.
trend environment to the downside.
Profitable.
Let's step away from the 4-hour candles. I want to show you what's going on. Again, just taking a step back each time, adding more time, longer duration, still a similar pattern though. You can see 4 areas of consolidation. In this instance, we're talking about a well-defined area around 18 that we're still struggling to get up above right now. Bit of a double top here from the end of or beginning of 2023, and we're talking end of April, beginning of May, up around 2021. So again, this is a stock that has struggled, to say the least. Taking a look at where we stand longer term, very similar pattern, right? You've got areas of consolidation that continue to form lower levels. Going back to 56, we're talking about 2011. And in this instance, again, a very well-defined area of consolidation forming around this 18 level. I don't really see the bullish narrative here for me on when I see time frames or multiple time frames suggesting the value continues to move lower. Again, for me, I have a hard time buying into this one as of yet, but
ECB breaking out there, $1.03 now.
Trying to make a stand to the upside, and around 20.75, 21 would be a key area if we were to get above that as well.
Yeah, so we're seeing the consolidation on this downward move. Tom, final thoughts?
You know, the divergence we have out there, and I like the idea that when you have
starting to rally a little bit.
the gold equities go before the gold
Square is
contract,
actually rallying some
normally
too.
you have a market that's happening. You know, the contract right now is trading up 16 bucks, 19.49. You know, if this contract's going to go, this contract's going to go to about 2100. You know, at 2100, you're going to have these gold equities a lot higher. And, you know, for where the contract actually went, it's amazing that these gold equities didn't get actually slammed even more, because most of the time they do. So, you know, we had some buying yesterday. You know, we got a little buying out here today. I'd like to see a little more volume out here today.
A little buying here, a little buying there.
We have, you know, I think we have that 20 bucks in line.
Buying everywhere.
Yeah, okay. This is a good big three today on a Friday. Thank you both so much. Ben, always great on the charts. Ben,
All right, here's
Lichtenstein
first
and Tom O'Brien
resistance
of
level for SPY.
and
Excuse me.
AT&T and Barrett Gold today. Thank you both for the big three. Coming up next, spotlight on Apple. So the iPhone 15 pre-orders went live today. You can pre-order today. You can actually
And
go to the
resistance
store and
is
get one
holding
of
so
them
far
in a
on SPY.
second. We'll cover that and a lot of Dan Ives of Wedbush, his thoughts coming up.
ACB at the highs there. Testing the resistance from the 12th. Climbing a bit. AMC woke up there, 3%. Kind of moves with the SPY at times, huh? What I'm seeing? Maybe. Yeah, now it's above that trend. Why this? I wasn't convinced that this was the high yet. go, ACB. Breaking out again. $1.05. Do it. $1.20 is a pretty good resistance.
All the things that have come out.
Yeah, this guy.
I know there was a lot of talk and excitement surrounding the cameras and the double tap feature on the phone. What stood out to you? Was there anything that you said, wow, I really like
This
that?
guy's always teasing. Look at that Aloha wear. The blazer. His basement. What's up?
Well, I think, Nicole, I think a lot of the specs were exactly what we were hoping for. But if you look at the chip, Apple Silicon, this is the best smartphone in the world. I mean, when you look at even Huawei, that would be the equivalent of buying an iPhone 12 if you bought a Huawei phone in China. And I think it just comes down to they are not just what I believe gaining share in China, for this upgrade cycle, especially with massive carrier promotions, I think it's going to surprise in the upside. And I think we sit here 3, 6, 9 months from now, and again, the bears are back into their caves in hibernation mode. And I believe Apple is, $3.5 trillion when we look at it over the next 6, 9 months.
Whoa! All right. So 174. The high was 198. How do your new target is now what?
Whoa!
230.
Hey, we just had a U close 5 minutes ago.
And you have a bull case too.
Sorry I was late this morning, guys. Thanks for your support, though. Appreciate your thumbs up. 12.
250, and I think
12
this
likes.
is ultimately-
Thank you.
As we take a step back, I believe we're in a new tech bull market. I think Fed ultimately goes into next year. We start to see that white flag they cut. And I believe Apple, along with big tech, is going to be much higher.
AMC climbing up some more.
15% rest of the year.
Yeah. Can I want to turn your attention to Tesla, because you said that I loved your phrase about the champagne, that they're drinking champagne or something over there over at Tesla. They don't have a union at Tesla. With what's going on at the UAW, what does this mean for Tesla? Where do you think Tesla's headed and why?
I mean, I think Musk right now and Tesla, they're drinking mimosas this morning. Because when you look what's happened in Detroit, that's a huge negative for the big three.
It is.
And a huge positive that I see for Tesla, non-union competition that was supposed to be coming. And
Not
now
wrong.
they ultimately take a deal, 30-40% wage increase higher. They're going to have to raise prices 3,000, 4,000, 5,000.
Oh, that's a good point. So prices of the big three vehicles
course.
could go up on the heels of this because they're going to have to pass some of those costs I know it's against
Nice, Bubba. Well done, man.
mantra, but I was thinking today.
Not that
what
late.
if Tesla, because
Flush.
you can do it in a millisecond, I'm sure.
Oh yeah, your 12:30
Just
play.
makes
All right.
A combustible car, a regular car, and says, "Oh, by the way, while the big three are battling it out and twiddling their thumbs, it's not really in my wheelhouse, and I'm not a true believer in this.
This
kind
is the
of
way it
vehicle,
gets.
But I wanted to give the people what they want. We have a great car for you.
14
it's
likes
a
now. Thanks,
regular
guys.
Gasoline car. Would they ever do that? Do you think, just to compete against the big three and squash them?
Yeah, look, I think there's a better chance of me playing in the NFL on this Sunday than that happened. I mean, and I just think the call comes down to electric vehicles. That is where this green tidal wave is ultimately going to take over. And I think Tesla right now is the top of that mountain.
So Tesla today, right now, is trading at 274. Your target is?
Yeah, so right now, we believe 350 is sort of base case. I think we see units that I think are hittable to beatable for the rest of the year. Margins drop out the next quarter or two. Cybertruck comes Halloween. And I think by next year, I mean, you could be driving a Cybertruck out in the Hamptons.
All right, and then tell me about all those other names that you love, Palo Alto and Zscaler and Microsoft and all the other ones that you love. What's your list these days?
Yeah, so Palo Alto, Zscaler, CyberArk, favorites on cybersecurity. Microsoft continues to be our favorite cloud name when it comes to cloud. And then I also believe we're now in with a fourth industrial revolution. Favorite core AI names besides Microsoft, and I think Palantir continues to be the best purest play AI name out there.
Yeah, I have to post that great picture that we took, and I can put all these names with it. I didn't get to it yet. Thank you so much, Dan Ives. Love when you're able to come on the show. And
Great seeing you. Thank you.
And I'd love to see you in the NFL, but I wouldn't want you to get hurt. So I don't know. Good to see you, Dan Ives. Really appreciate it, Wedbush. Coming up, the disruptors. Keysight Technologies, just an upgrade that we need to talk about from Morgan Stanley, and George Silas will have all the details.
ACB consolidating up here a bit.
Well.
GNS sub $1. Might be a nice pickup here. I'm gonna get some. Oh, my AMC calls are only up 6%. I just sold them. It's crazy. We're up like 30 on that other day. This day? Or even this day? VinFast up 3%. Wakey. Buy broke that resistance. Baby steps climbing out of the hole. Yeah, I know. I just, I didn't sell it that day either. I continued. I figured the trend would continue, which seems like maybe it will. We're up 4 1/4 now on AMC. I have till October OPEX, so pretty good amount of time. I was wanting these things to get in the money before then. Wasn't planning on selling it and buying back in though, so that's why I'm kind of just holding them for a little longer trend. Good though, 4.5% now on AMC. You bet doesn't look too bad actually. Maybe GNS isn't a good spot. Yeah, maybe not. Alright, I'm not gonna get it. Foster? Nice, Bubba, well done.
Primary objective. Break even is at 127.50, but if the stock falls at or below 120, that's where the max loss of $7.50 a share is achieved. So the return on risk is 33%, and again, selling that 130 put is basically selling a 34 delta, which implies a 66% probability between now and expiration that the stock will trade at or above 130.
And you have a couple of months to get there. All right. Thank you for that,
Right.
George Sillis. Great to see you. Really appreciate it, George Sillis. All right, so we are watching Adobe. Analysts are raising their price targets in Adobe after the company reported its earnings yesterday. After the bell, our panel weighs in next in our 360 round. Schwab Network, we'll be right back.
Taking off some ACB up here. I don't know. I don't want to sell this thing. It's so volatile. Still looks nice, but it is at the high. Offer shares. Okay, sold half my ACB there. I'm gonna put a stop on the rest at break even, so guaranteeing profits. I don't have to look at it. Concern myself with it. Only 5. Would have had 2 for 2 there. Three and a half % on AMC. New strategy, can't lose. This is the way. Yeah, 0.7. CB consolidating up here. Little cup maybe formed. There's a gap it left there though.
Particularly this, I think this, this text to image stuff is going to change the world. And I think this thing's going to be a $700 stock in not too long. That's what I think.
Wow, there's
Adobe?
a good quote too. $700 stock. I wrote it down. It's wonderful to see you both. Thanks for that coverage of the breaking news that we got from Adobe yesterday. All the
Looks like a nice
earnings
short right
around
now.
the outlook. Good to see you both. Dan Romanoff of Morningstar and Chris McMahon of Aquinas Wealth Advisors. Thank you both for being with me today on this Friday. I'm Nicole Petalides. Thanks for being with me here at the New York Stock Exchange, 11 a.m. and 2 p.m. every single day here on Schwab Network. So I'll catch you at 2 for the watch list, but keep it right here. Fast Market is next.
We'll get some rest, Nicole. Adobe 700. It's a stock I don't follow very much. Oh, SLE was a one-day deal, huh? Back down. Planet Fitness down 13. What is this? CEO transition? Oh. Interesting. Fingers down 10 today. Yeah, it feels kind of loud. Because it is kind of loud. Tupperware broke through that support. Down 10% now. 9.5. Its way to the next support. Looks like it bounced on 187. Joby. Or Joby. Sell it all off. Back to $1. Or 3. Looks like some of the froth has been coming out of the market the last couple days. You don't know looking at SPY, but these individuals. Not Carvana though. Here's your resistance on Carvana. Redfin's down 4. Woof. Woof continuing to sell off. Oh, look at that! Look at that trend on Chewy. That's ugly. Whew. Breaking through that support. Wow. All-time lows on Chewy. Just some of the market cap, like some of the valuations in some of these companies, just like they're good companies, they make money, but they still have crazy pricing. Net income on Chewy is 20 million, 18.9 in a quarter. $8.8 billion market cap, 2.7 billion quarterly revenue. Palantir still hasn't sold off. Boss. Oh, Savers took a hit since IPO. Nvidia's down 3%. Yeah, there's some weight in some of the red stocks. Falling up 20 still. ACB holding up almost 20%. ACB coming down here. Like maybe to VWAP. GME almost up 1%, 0.75. Buy back to VWAP. See if SPY can keep climbing here. Mullen climbing up a little bit still. Gonna scale out of some of these 447 calls. Too far to the money, they're getting wrecked on theta for a midday chop. Just not sure if we're gonna break out here or not. Seems like it's kind of starting to slow. Mullen with a little reversal back down to VWAP. FS up 2.8. Gap fill 24. Do it.
They have anything upwards of a 40% wage increase. If that gets approved, this would be a major headwind on the cost front, and eventually it would have to pass through to customers in the form of likely higher EV prices. So he says the clear winner in this Game of Thrones battle between the UAW versus Ford GM is Musk and Tesla with champagne on ice. That being said, it's not giving a boost to Tesla shares either, but we'll have to see how this all plays out.
I agree with that.
Yeah,
They're already backed into a corner.
I mean, Elon Musk has just got to be laughing right now because this does play into his hands.
He keeps lowering his prices and affecting more and more of Ford and GM's ability to be profitable in the cars and compete at those price levels. I think, some of the comments from
Tesla
some
to
of the CEOs,
1,000,
especially Farley from Ford, they
again
are concerning in terms of their ability to be profitable with those levels.
Yeah, and I'm getting a little bit of a break, I think, by only doing spotted.
I think that's a light touch. I thought so too.
Yeah, from the union. All right, thanks to Caroline Wood, senior markets correspondent here on the network, breaking down the UAW story. But now let's bring in Joe Mazzola, director of trading and education at Charles Schwab. Joe, I wanted to get your take here on the choppy markets that we're seeing. It seems like there's a lot of uncertainty out there in the markets, but the VIX isn't reflective of it at all. Is this maybe a consolidation phase, and that's why nobody's really taken a stance, either bullish or bearish at this point?
I would agree 100%, guys, and I would say this. I say until we kind of break out to the top end of the range on the equities, or until we break it out of the top end of the range on the 10-year, which is kind of getting close today, 4.33. I think 4.35 would be an area where I think you might see some concern in the equity market. If you start getting above that 4.35 level in that 10-year, you might start to see those equities roll over. It's kind of just, it's going to be a bit of consolidation until we move out of those ranges. That's what I've been saying for the last couple of weeks, and I'm kind of sticking to that call.
Yeah, Joe, Kevin and I talked about yesterday. We were rallying across the board. The dollar was higher. Yields were a little bit higher. Crude oil was higher. Everything that I kind of, set the tone for equities was the opposite. It seemed like it was bizarro day in the markets, but we're seeing that again today where the dollar's a little bit lower. Yields are higher. Oil did reverse, but is this a systemic area in the market where, hey, you can't rely on things that you've been relying on in the past just because all the inner workings of the marketplace are kind of pushing and pulling against each other?
I think that's a good question, because I think right now we are at one of those points where you just can't use all the old data points, right? I mean, there's so many things that are going on below the surface. I mean, just from an equity standpoint, the breadth is just kind of, it's not really holding that strong. I mean, you only got about 37% of the stocks above their 50-day moving average in the S&P, around 50% above the 200-day. So that's meandering. So you're not seeing the follow through that we initially saw in June and July. That's really started to dissipate very quickly. Although, if you look at kind of where we are, we haven't pulled back that much in the overall equity market. It's just that there's cracks below the surface. And I think that investors are starting to kind of realize that, especially because there's alternatives out there. And I hate to talk about this, but it's the truth. When you're looking at a earnings yield on the S&P 500 of about 4.6%, but yet you're looking at a 3-month treasury paying over 5.3, 5.4%. There's alternatives, and you're just seeing people are starting to you're seeing the outflows in the equity markets, you're seeing the outflows in the ETFs and the mutual fund markets, and it's starting to go a little bit more and more towards cash and towards the money markets, because I think people are just kind of doing a wait and see approach to see kind of what that next leg is. Now, I think the trade-off is this. I don't think it can just be that black and white, right? Because if you think that you can make 15, 16% in the equity markets like they, basically are for the year, then, why keep it in cash? But I think since we've already seen that, investors might be saying, did we pull forward a lot of those gains that we were expecting in the second half into the first half? And what are we expecting now for the next couple months? Yeah, and historically, Joe, we've seen that, and Kevin, where equity market rallies at the start of the year, and those gains usually get extended, but those are historicals, and this doesn't seem like a historical year. But Joe mentioned the breadth of the market isn't there, whether it's bullish or bearish. It seems like they're buying dips and selling rallies, Kevin, and that's why you're seeing maybe volumes a little bit lighter than normal also post Labor Day.
Well, there's a story. Yeah. Right? For part of the market has a pretty good, solid story, which is AI. The euphoria over AI has driven a lot of gains in some big, high-profile names, right? We were joking the other day with Oliver Rinnick. I was joking with him yesterday going, Birkenstock's going to IPO. How are they going to connect the dots to AI with Birkenstocks? They're going to figure out a way to get their value higher. But this AI story has fueled a lot of movement on the upside here, a lot of euphoria about a lot of big names in this market, and eventually that's going to be a promise to the future. You're seeing it, Adobe, what was a key
Right. NVIDIA, same way. Oracle, same way. And Joe, to that note, you look at the consumer sentiment data that came out. You know, there were some parts within this preliminary report that were positive, and those were the expectations, right? Moving forward, those were a little bit less than expected. The 1 year, the 5 year inflationary expectations starting to weaken, and we've seen that in the core. Joe, is there any takeaway here because the headline number was weaker than expected?
Well, I think if you combine that with some of the other data we got this week with CPI and PPI, coming a little hotter than expected, I think it's changed. It hasn't changed the September probabilities for the Fed. That's basically 0 to 5%. I don't think anybody's planning on any movement from the Fed in September. I was surprised actually to see it come in a little bit in November. So it's really a story of strength in the U.S., weakness abroad. And what is that going to do, for the central bank policies? And I think, a lot of that is kind of making its way into consumer sentiment because the consumers are looking at what they're seeing right now in terms of gas prices going up. That kind of hits the sentiment. But at the same time, they're also seeing that there is weakness abroad in the rest of the world. And then maybe that is reflective of their expectations for interest rates going forward and inflation going forward actually coming down. Now, the Fed's got to like that to a certain extent. You see that
ACB find support there on VWAP.
Pulling back a little bit. That's right in line with what the Fed is hoping for, and maybe that's why you started to see some of the probabilities for the November come down from last week. Last week they were just shy of 50%. Now they're around 38% for probability of a rate hike in November. So that could be bleeding into that.
What might be the most important thing we get next week from this market is a new dot plot.
Yeah.
Dots for going forward and into next year. They're not going to move on rates. The probabilities are extremely low, but the dot plot, that might be the biggest news story coming out of next week.
Light on earnings next week, but the Fed meeting will definitely be in focus. All right, guys, let's take a quick break. When we come back, we're going to discuss Netflix. The stock's fallen 10.5% this week, but still up about 35% on the year. Fast Market's coming right back.
When is OPEC starting? Options expirations expires today by end of day. Been misled on what OPEX is, I think. You won't necessarily get an OPEX run. When you get an OPEX run on GME, it's the week after OPEX or OPEX. But that was only if there was significant call volume that was unhedged. It was in the money expiring today, which we haven't had significant call volume on GME in like a year. Don't get your hopes up. Right now it's at a nice resistance to short it, actually. If it breaks it, then yeah, you can go long. Otherwise, you're going to see 16s, 15s, maybe even lower. 10. Got pounce on VWAP. ACB got. Helped on ACB.
If you are somebody who's looking to hedge a long equity portfolio, if you are looking for somebody who's looking to take maybe a debit spread on, whether it's a put or a call debit spread, it's relatively cheaper than where it's been, just because of, kind of given the overall options market and the drop in implied volatility that we've seen just kind of across the board.
Yeah, you mentioned that 100-day moving average not acting as support today or yesterday as it broke through that 50-day moving average. It broke through on that big down day earlier in the week. But when you look at this, Joe, the RSI is actually below 35 now because the stock keeps sliding today. Yep. But how do you want to look at this one from a trading perspective?
Well, what's interesting, Tom, it's, as you said, it keeps dropping. So the put spread that I was looking to buy, or the put spread that I offered up to you guys, is probably more expensive than it was before. But basically, we're looking at the October 13th expiration, and that keeps you out of earnings, just in case you don't want to add that extra level of complexity to it. I have the earnings date as October 17th. So this is the October 13th. It's a weekly option. You'd be buying the 390, 380 put vertical. Earlier in the day, it was trading around 310. I think it's probably 340, 350 now. If that's the case, let's just say it's still at 310. It's going to put your break even down to 386.90. It's going to give you a max gain on that spread. Basically between the two strikes of about 690 and your max loss of 310. What it's really looking forward to, is that, if the stock does continue to roll over, where could we find some support? support level to me, at least, kind of where we're currently at, is if you look at where the stock kind of rallied from when it broke its prior range, that's right around that 380 level. That also happens to coincide with some Fibonacci levels on a one-year chart, which would take you down to about the 61%. Remember, whenever you're looking at debit spreads, you always want to buy where it's at and sell where you think it's going, right? Whether that's a call spread or a put spread, you want to buy where it's at, sell where you think it's going. Now, this is a trade, and I'm not making a recommendation that that's where I think it's going, but when you're constructing those, that's something that's important to look at.
Yeah, definitely, Joe, on that, and like bringing in the technicals in on this one. But let's break this one down. October 13th, monthly or weekly cycle. So you've got a few weeks till expiration on here. Buying the 390 put,
third
selling
on
the 380
VFS.
put. So buying a directional bearish put vertical, as an example. We've got 310 debit on there, as Joe mentioned. It has expanded to about 340 because the stock keeps sliding. But that break even at 386.90, Kevin, to the downside. Anything below that is profitability. Debit you pay, $310 risk per spread. But that break even is only about 2.3% below the current share price. So you don't need like a massive move.
There's several interesting things about this trade. And one of them is if you look back to late May, there's a gap in the chart that may be filling, right about to be filled here. Number two, Joe's paper money trade has about just under 5 Vega, and even though the stock is sold off, the IV percentile is still at 26. So still a modest IV percentile. So you're buying Vega where Vega is still considered low for implied volatility. So yeah, you're right around a gap that could happen. You've got low volatility in a stock that's moving down. All those would favor this paper money trade.
Yeah, and Joe, when you look at this, buying directional verticals, a lot of times we talk about higher probabilities of success, higher implied vol levels to take advantage of moves with maybe selling out of the money verticals for directional play. This one gives you a little bit more flexibility as far as trade management goes, also because you don't need it to be below 380 at expiration. It can go below 380 anytime over the next few weeks, and that thing can expand in price, correct?
GME up 1%.
It can, and the other thing that I would add to that is the expectations, right? It's not a given, but the expectations that implied volatility tends to creep back up as you get closer to that earnings cycle, and this trade expires 4 days prior to earnings. So, even though you're looking at, say, the October 20th earnings cycle where implied volatility is much higher, right around like 43%. The idea is that you would start to see this kind of gravitate and move towards that level as you're getting closer to expiration, especially if the stock continues to roll over. I think one would expect that implied volatility would continue to creep back up, and you do have the ability to amend this trade if you do need that. If you get that move sooner than you expect, there's no reason that you can't take it off. Or if you're still kind of meandering within that, you can always extend the duration on this by rolling it out a month or two.
Yeah, different ways to do that if the market's open, liquidity is provided. And we start talking about probabilities of touching that 380 level. That's about 62% to hit 380. So, probabilities in your favor on that side of the range that we kind of look at when you're talking about probabilities of touching a specific strike. All right, thanks to Joe Mazzola, Director of Trading and Education at Charles Schwab, for joining us today. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for discussion on Google parent Alphabet and the data on the stock moves. The tech giant's up about 54% this year, hit a 52-week highs just yesterday. Stick around, we're coming right back.
Oh, SPY's doing its midday job still. Trying to decide if it wants to move to VWAP or back to the lows. Oh yeah, 12:30. Going for the downside. All right. I thought you were gonna get a strangle. Strategy to adapt. All right. So a strangle if you're less certain on the move. Direction if you have bias. Bye. Back up above you up.
From a artificial intelligence standpoint, they've got their Gemini software coming online. Very impressive debut. I think that this is probably the company that if I were going to bet on, one of the companies that's not OpenAI to dominate or to at least succeed in the artificial intelligence sector, it would be Google, primarily because they have massive amount of experience with computing power and an absolute treasure trove of pretty much all of the information known to mankind at their fingertips and in their systems, already there to draw from. And so I think they have an enormous advantage in artificial intelligence. And then when you start talking about, cloud computing, they've got a great edge there. I think they're starting to catch up with Amazon. We see them as a solid, second place, third place to Amazon, right there with Microsoft. But from a consumer happiness perspective, when we see people, signing up for those Google Cloud services, they tend to be happier than those on Amazon. I think Google's making good headway there. And then from a purely consumer perspective, what we have seen over the last couple of weeks in terms of the ramp up in adoption levels and people talking about signing up for YouTube TV, I think is a really big game changer for Google. I think that they're the ones that are capturing the most out of the cord cutting movement, which is, I don't even know if you call it the cord cutting movement anymore. It's just streaming is here, it's here to stay, and it's accelerating in terms of its impact. And YouTube TV seems to be coming out as the big winner in that group as well. So, from a tech company standpoint, I don't know what else you could want out of a company than what Google is putting forward. They've got their hand very successfully in the mix of all of the big trends that are happening in tech.
Andy, I have a little experience trading a big multinational like this. And you know what you find? It happened to me when I used to trade GE for years and years and years. It's always something. right? There's always a story when you're this big. You're always fighting some headwind. But that being said, they always come out on top or on the better side. Now, we don't know what's going to happen with Google Health, but I'll give you one example. This stock sold off hard when ChatGPT and Bing came out, right? And that was going to change everything. Didn't even move the needle a bit on search in Google. And then you think about how popular Apple is. Well, Android has 71% of the market.
Oh, this big inverse cup and handle.
And then YouTube that you mentioned, 9.2% of all viewers were on YouTube.
But the handle can retrace all the way back up to the UF or higher.
That is only going to get bigger. That move
that might not all play out
TV,
today even.
The move from Disney this week trying to get rid of ABC, that is telling you that this move towards Google, away from other parts, is only getting better. They're in a dominant industry position, Andy.
Yeah,
Or you're talking about a cup and handle on VIX.
In a lot of different industries, and that list of
Yeah, it's probably just inverse cup and handle we're seeing on SPY.
You know, when you think about the resources that Google has, not just money, and it's really the intellectual capital that is at Google, the information that is stored on their servers. It didn't matter. Ultimately, it didn't matter if they were, quote, late to artificial intelligence, because the resources that they have on hand, far exceed what OpenAI has, far exceed even what Elon Musk can have. I think that's probably why he ended up buying Twitter, was to get his hands on a lot of very interesting real-time data. But overall, I think this is just another example of one of those companies, like you said, kind of like GE was in the past, or Amazon has been. This is just one, if you hear somebody counting Google out, you kind of have to discount their opinion moving forward, because they may not be the first onto the racetrack, but most of the time they're the best crossing the finish line. And we've seen it time and time again from this company for 25 years.
Andy, they make most of their revenue from advertising. I mean, tying that into this story about Google Alphabet just off 52-week highs, is that remaining as robust as we think it is, because we didn't get that dip that everybody was predicting earlier in the year, and that's why you're seeing the stock move this way? And is it remaining healthy according to your data?
Yeah, so I have a different theory on this. I think that the ad market has softened. I just think that the companies we tend to pay attention to are delivering much better results via technology and much better targeted ads. So they are able to keep their prices, whereas the reason Disney wants to get rid of ABC, I think, is because they see the writing on the wall that from an ad performance standpoint, they cannot keep up with the streaming services that are using the trade desk, that are going through Roku devices, that know so much about every viewer on a granular basis, that they're able to deliver highly targeted ads that advertisers will pay huge dollars for. So I think the overall ad market has softened, but not at the top end, where the delivery, the conversions, and the targeting is the best. And so that's going to continue to benefit Google. And then I think once the ad market starts to heat back up and we get an economy that's really back on track, I think that these companies could absolutely go to stratospheric levels, because they've got it all figured out in a somewhat soft market.
Here's the thing, Tom. Here's the stats. They currently have 27% of the digital ad market share, and they get 78% of their revenue in Q2 from digital ads.
Digital ads.
Big numbers.
Yeah. I mean, you got to Google that stuff, right? That's that's the phrase. And it's not stuff. It's Google that stuff. All right, Andy, great stuff as always. Great data. Have a great weekend.
You too. Appreciate it.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data for us. So, Kev, he gave us the data. The stocks just ramped up. I mean, it's one of the few tech names that's still over its 50 and 200 and 100-day moving averages. So it's extended, but at the same time, everything's going pretty well besides that Department of Justice antitrust case against them.
Yeah, but like I said, it's always something, right? It moved from the ChatGPT and Bing, and that hurt the stock, and then it rallied off that, and now there's a Department of Justice, and that's going to cost them time and some money, and that concerns traders. a news story will concern the stock, and then there's another thing, Tom. The overall market might be a little overextended.
Right.
And so why is the stock down today, Google Alphabet? Well, the market's down.
Yeah.
It's in the S&P, it's in the NASDAQ. It's going down if those other names, if those indices go down. So what I just did for a short-term trade, Tom, I went out till October 13th, about a month from now, and then I went down to I went to September 29th, about 2 weeks from now, and I bought the 133. The expected move then is about $4.50, $5. I bought the 133 call calendar. Now, this is a paper money trade. This is not my opinion on Google Alphabet, but this trade is trading for around 75 cents, and this will give you some protection. It gives you about 6 short deltas on the downside. It's collecting theta, but it's got about just under 5 vega. So, Tom, a calendar spread covers many things if you're bearish on a name, short-term, long-term, whatever, because you may get the bump in implied volatility, which adds to the vega component in a calendar. That's why put calendars are a favorite of some traders on the downside. Doesn't mean you're going to be successful, but you may get that second bump from implied volatility as well.
And that would, in essence or in theory, expand the price of the calendar,
if the implied vol goes up on the downside, which history tells us they tend to.
Yep. Let's break this one down. Example trade. Buying the October 13th. The weekly series expires in 28 days. Buy the 133 put. Sell that same put in the September 29th weekly series that expires in a couple weeks here. Paying a $75 debit. There's your risk, $75 per spread. But look at the break evens here, Kevin. Just below where the current share price is, about 137.50 on the upside and about 129 on the downside. So while it's a bearish directional trade, you don't need that big, that massive slide down. You just need some consolidation, a little bit of a pullback here over the next month. You do have some assignment risk on that short 133 put that expires in 14 days on the September 29th weekly cycle, so keep that in mind. But the idea here is you're buying a low implied volatility in the overall market and in Google Alphabet. If it does slide, maybe it expands the price of that. You have that ability to roll that short option as you get closer to expiration in 14 days.
Current
also,
IV percentile 10.
10. Yep.
So from a buy low, sell high perspective, it's the right side of the market to be on. Doesn't mean you're going to be. Remember, it's a short delta though. If Google Alphabet goes up, this will underperform.
Yeah, if you want to do something
Right
a little
spot,
more
see what
bullish,
you got
maybe
here.
do the 140 call
And you
to
do
the
call,
upside.
right.
Yeah.
I mean, there's the great utility of the calendar spread. You pick what you want, but the Vega component, the long Vega component, is on the right side of buying low, selling high.
Yep. Good look at that example trade there in Google Alphabet. All right, let's take a quick break. When we come back, we're going to talk another big tech name. That's Microsoft. The tech giants pulled back from all-time highs around earnings in July, but still up nearly 40% so far in 2023. Fast Markets coming right back.
45. Midday chop ensues. Theta gang doing their job. Doing it well. Mullins at VWAP. ACB also back to VWAP. I've not really been updating on barbecue prices because it's not really, there's like nothing to see. Up 7%, I guess. It's somewhere between 19 cents and probably 16 cents. And if you want to buy or sell. Oh, LAC is ripping today, 6 1/4. Good afternoon, Jay. PCB below VWAP now. Does have that gap fill down there, which would stop me on the rest. Not so fast, Bubblicious.
Times forward earnings. Also, considering the earnings growth for overall for Microsoft at around 12%, that's relatively modest compared to their 5-year average. And I think overall, the profitability for Microsoft is still remarkable considering the net income margins, which are about 30% for the business. I mean, this is essentially a mega tech monopoly, and you can't say anything other than that. But they continue to just expand on their partnerships with, for instance, companies like Oracle, which Oracle again runs really the enterprise resource backbone software for many large corporations, and now of course their mainframe integration with clouds front end essentially computing technology. That makes a lot of sense for both these companies to integrate their cloud-based infrastructure, and that is again more margin enhancing technologies. That's probably going to be good for both companies altogether. But if you look at last quarter, it was actually really good. The company generated about 8% revenue growth with about 21% earnings growth, so about 3 times sales in terms of earnings. Overall, the cloud-based revenues are continuing to inch higher. They gain market share. They have about 22% of the total cloud market share out there, still behind AWS, but nonetheless, that's very large for one company to have. And I think, overall, if you think about artificial intelligence, Microsoft essentially was a major investor in ChatGPT. They're integrating AI across all their software suites, from their operating systems, their search with Bing, their productivity suite, which includes, of course, Office 365, as well as LinkedIn from the standpoint of social media. I mean, this company is just well positioned, and it doesn't have, by the way, the exposure to places like China. That's, of course, Apple, which is really a technology consumer products company has. And I think that's another thing that investors might appreciate in this company.
George, the short term is one thing, right? The valuations are stretched on a price earnings, on a price to sales. They're all stretched higher than the 10-year average. But the long term, George, Satya Nadella talking about $500 billion in revenue by 2030. I mean, that's 10% raise in revenue every year up until then. The long-term look for this company, you can make a case that short-term, it's struggling here and consolidating. The stock's down $30-some since its last earnings report when it spiked, but no one can argue with the long-term outlook for this company, George.
No, there's no doubt. I mean, you just consider this size of this company and you're still generating 10+% sales growth on a year-over-year basis compound. That's just phenomenal, especially with this company being extremely profitable. I think one of the things that's created a lot of profitability is they're not very much inclusive of a hardware company, and I think that again speaks to the soundness of their business. I think at the end of the day, too, you have to think about their core operating system business. I think there's a refresh cycle when it comes down to personal computing. I think that's going to be a catalyst for this business. I talked about Intel as one of these companies that has actually performed quite well this year. I think based upon that and maybe some of the periphery memory manufacturers like Micron or Western Digital, but that is again not growing very fast, that operating system business, but it's still a core revenue driver for Microsoft, not to mention the cloud. So at the end of the day, I mean, this is just a technology monopoly, and you can't really dispute that. But I think they have the ability to continue to optimize margins, especially when it comes down to integrating software services, cloud, as well as artificial intelligence, and that is a huge catalyst for Microsoft going forward.
Yeah, it seems like anytime they're struggling in one part or one division of their company, the other one's picking up the slack and actually growing faster than you'd expect.
I mean, the size of this company is massive, right? But it's in 3 of the 4 indices, and it's tied. Why is it down $5.50 today? Because the markets are down.
Right. All right, great stuff. Thanks to George Tillis, Senior Markets Correspondent here, breaking down Microsoft for us. Kev, now let's get to the trade here on Microsoft, the example trade. I brought this one to the table because pullbacks sometimes bring opportunities for people that look like, hey, maybe I haven't gotten into that.
I'm all about VWAP again.
Using the option market. So I looked at
an
unbalanced call butterfly in here.
I almost made a new high.
Giving myself a little bit of duration, about 5 weeks.
ACB selling off more.
So going out to the October 20th cycle, that won't capture earnings because the earnings are on the 24th, I believe, tentatively. So you won't capture that earnings, but you take advantage of if the stock rallies into earnings, like we've seen a lot of tech names recently, where we get some re-rates, some price target hikes ahead of earnings. This would take advantage of it if that does play out. So going out to the October 20th monthly cycle, buying 1 of the 335 calls, selling 2 of the 350 strike calls. That's where you want it to go. And then buying 1 of the 355 strike calls, unbalanced or broken wing butterfly here to the upside, paying roughly about a 470 debit. It might be a little bit lower than that right now, but if you pay a 470 debit, that's going to be your risk, $470 per spread. Your break even, $339.70 to the upside, Kevin. That's only about $6.50 above the current share price, while you're still giving yourself 35 days. Give me your take here on the unbalanced call butterfly.
This is a butterfly that it's trading right around 470. It has a chance, if it goes to 350, a chance to go to about $15, right? You are short the $5 350, 355 call vertical that takes some of that net debit away. But this is a long-term play. You've given yourself some time here in Microsoft. News could be a catalyst. The overall market recovering could be a catalyst. This is a bullish play, though. Remember, it's 20 deltas long. You are paying theta because all your options are out of the money. So there's another component of this. But this is a bullish play, like I said, about 20 deltas.
Yeah, you get that kicker at or near that short 350 strike, Kev. I think that's the key takeaway from here. And this type of strategy, I always look at it like, yeah, if I expect Microsoft to go up $10, $15, this is a strategy that it would work in. But maybe I don't expect it to go above 355, the top end of that call butterfly. But if it does, I'm still working with basically more than a double on this type of strategy. So that's the way you can look at it, offsetting some of the costs on the initial purchase of it and the risk, but also offsetting some of the profits if it goes above 355. Kev, that's going to wrap up the trade, but looking forward real quick to next week. We mentioned the Fed meeting. That's going to be in everybody's eyesights at this point, but anything else sticking out to you?
No, low on earnings. Not great on data. We got some big data points this week. Listen, I think the Fed is going to dominate next week's rhetoric. And like I said, the dot plots is going to be, remember, because next year, early in the year, they've got cuts built in. This is going to not give cuts. There's going to be no cuts in the Fed dot plot.
Well, think about this, Kev, and we'll wrap it up with that, is the Fed's told everybody they're not cutting anytime soon.
At you. But, and yet still, I mean, there could be an event, though that does it, but without that, the Fed's not cutting.
Yeah, definitely. All right, that's going to do it for Kevin and I today here on Fast
It's
Market.
not cutting, what?
Right here on the Schwab Network. Next Gen Investing's coming up.
No. I'm up on 1 o'clock. See if SPY's made its direction here. I'm down a little bit. Another bounce here, or this is beginning of another drop. Be flipping my calls to puts if we do. Can't believe I let Theta Farm eat me. See if ACB is building a cup and handle here. It's not ready to make its move.
today's session on news that its board was outing its CEO. We'll discuss that more later on. Last but not least today, for Under 30, we will look at Instacart's IPO ahead of what is all this IPO enthusiasm naturally following that ARM IPO yesterday.
That's going to be a fun conversation with George because I'm not sure Instacart and ARM are all that comparable. So we'll see if the same excitement spills over into a company like Instacart. Now, we have a name on our list that's not far removed sort of from what Instacart's doing in Dash. I'm excited to get to at some point. But we got a lot to get through. Auto strikes. Just seems like there is just so many stories happening at the same time here, Jenny. But let's do upvote, downvote, not endorsements, not recommendations. Not a lot tying or threading these together once again. No real overarching themes, but I think all individually quite interesting stories.
And perfect timing. We'll start things off here with DoorDash, which I didn't even really realize that connection to Instacart, but similar in the world of delivery. But DoorDash did announce they're transferring their listing from the NASDAQ to the NASDAQ from the NYSE on September 27th. That was some news we got today. Also got news out of MoffettNathanson that did downgrade shares to market perform from outperform. And the analyst does believe the resumption of student loan repayments introduces a bookings risk to food delivery, saying that DoorDash and Uber Eats have a greater proportion of monthly active users in the 25 to 44-year-old cohort than any other company in the sector, at around 65% for DoorDash, 67% for Uber Eats. The firm is also considering food delivery, which is a 60% price premium to picking up or ordering at a store, to be one of the most discretionary behaviors of the average consumer. The average student loan bearing consumer is about to experience a 14 to 19% hit to their discretionary spending power, resulting in some of these near to medium term risks to DoorDash's bookings, they said. I thought this was so fascinating. First of all, 14 to 19% impact is something I like the way they quantified that, but also the 60% price premium pains my heart because I do order food delivery. It's not necessarily my worst expense, but it is one of those things that typically I do it when I cannot leave my home. I'm under the weather for various reasons, but 60% would make you think twice about ordering delivery.
What I've also found too, because I sure have spent my fair share of time on these delivery apps and money getting things delivered, is you kind of feel like you need to get more than you maybe normally would because you want to make it worth your while. And so I have certainly spent some cash on those apps. But you know what I also thought was interesting is I also have kind of a way I go about it. Like I typically used Uber first, not endorsing it or saying it's better, but because I also got benefits for the ride-hailing aspect of it. But there's certain restaurants that are only on DoorDash and vice versa. So really what brings me to a place like DoorDash is just, do I like what they have in terms of selection of restaurants?
Yeah, that's a good point. I got DoorDash like 30 minutes ago. There was the smoothie sitting over there because I couldn't leave the office. So it does definitely fill a need, but that 60% premium hurts me for all of the times that I was too lazy to go out and pick it up myself. But our next name today here also fits with our broader food theme, that is Shake Shack, which has been a nice outperformer this year. It's up 50%. We are seeing a North Coast analyst
GME feeling that a little bit too, the downside.
$85 price target. And they said this was a move to reflect a more bullish outlook on the fundamentals based on their recent checks and a review of overall foot traffic. The firm does believe in-store traffic has increased relative to the prior quarter as commuter traffic strengthens, and they expect this trend to continue this fall as more employees return to more normalized commuting patterns. In addition to this in-store traffic momentum, the analyst did say Shake Shack is benefiting from high single-digit price increases, which is something that seems like is affecting all of these restaurants right now. They're definitely not getting any cheaper, it seems. But this name making a nice move to the upside today. We do see of the 19 analysts pretty skewed heavily to the hold side. There's 6 buys, 12 holds.
I don't know where you get that number from. Is that a fib level?
Price target does come in slightly below.
This low is 443.75. This one's 443.52.
22% upside from here.
That extended hours
level? A bit of a downwards trajectory as of late, so this analyst may be seeing some optimism in that recent sell-off as an opportunity. I think that's quite interesting. But, you know, Shake Shack, now this is one of those places that doesn't deliver great, but it doesn't deliver bad. Great restaurant. It's all around just high quality, good stuff. I kind of miss it. I moved away from the downtown, and there's no Shake Shacks nearby, and maybe it's just lunchtime on a Friday, and I'm a little bit hungry. But what I will say is it's interesting to see that they are optimistic on this. They have that $85 price target. That price target's going to be basically going back, you know, over almost 2 years from now to get back to 85. So pretty optimistic call from this particular analyst.
It is, and I also agree that now my mind is on Shake Shack. My guilty pleasure is Portillo's. I have like that Chicago affinity where Portillo's is probably my #1 delivery
pizza place.
Now that we're talking all things food. But our next name today,
That's the pizza
shifting
place?
away from making us both hungry, is Unity Software. Now this name is
All
so
right, getting to
interesting
Lowe's
because
today.
it's always one of these top trending
Lowe's.
stocks on Wall Street Bets. It has a ton of volume. It doesn't always move necessarily on news, but we did get some news today out of B of A upgrading shares to buy from neutral with a price target raised to $56 from $46. This follows Unity announcing pricing and plan changes for its Unity Runtime and Unity Plus customers. The firm's analysis points to improved monetization of the company's industry-leading mobile game creation engine. They also do believe that some of the known risks and execution issues are more now priced into the stock. They also, they do see potential upside to their fiscal 2024 and 2025 estimates. It's up 27% this year. It's pulled back 2% this month alongside the overall market. And it is down still around 5% this week, but up 71% off of its lows. And this name definitely skews at least more optimistically. Of these 27 analysts, I was seeing 16 buys, 8 holds. There were 3 more bearish leading ratings, but still, 16 buys out of 27 isn't too bad here.
Certainly a volatile stock, one that I think is tied to, of course, not only mobile gaming and gaming in general, but really the metaverse, which we don't hear much about anymore. Surprise, surprise. Maybe it'll make its comeback in the next few years. But a name that peaked out when the market did, right before the year end of 2021 into 2022. And it has never really got its footing since. The stock peaked out over $200, went basically straight down to this level in about March of last year. That's basically where it's been.
Took it off, I felt bad.
Granted, that sideways range has been a massive percentage. From 20 or so up to 40.
Piece of cake and a shake. That sounds pretty good.
But when you used to be worth 200, 210, it's still
Sounds like
disappointing.
diabetes and a shake.
The same story goes for so many of these
Hello.
names that caught that pandemic
diabetes.
surge that are now have retraced a lot of that strength and are sort of attempting to claw their way back. Our last name today, though, is Oracle. Now, Oracle did have first quarter earnings on Monday after the closing bell, and we saw some pretty significant selling that has followed through on the rest of this week. They are pacing to close out this week down around 10%, and they are slightly lower today. Now, HSBC initiated coverage on 10 different tech companies, those being Salesforce, Snowflake, Twilio, Zoom, CrowdStrike, DocuSign, Palantir, ServiceNow, Microsoft, and of course Oracle, which is interesting because they really gave very specific notes on each company. It wasn't really like a broader tech note, but specifically with Oracle, they did start the shares at a buy with a price target of $44 a share. This name is pretty even among those hold and those buys.
Help psych you up.
16 buys,
Jay, can you help psych you up getting to Discord?
sells as far as I could see, but the average price
I don't know. You can't
target
figure it out for some
at
reason.
around $127 a share does imply around 11% upside. Pretty much putting
But it
it
is
back
his
to
desire.
where it was after or prior to this.
Think you've helped other
earnings
people
move
get
to
in?
the downside. Also, we got some news yesterday that Oracle's Larry Ellison, as well as Microsoft's CEO, are bridging what has been a decades-long rivalry. The two companies announced this new database service for customers to access now Oracle services in Microsoft's Azure data centers, deepening their cloud integration for both companies, really. The two companies did also say they simplified the process here to make customers buy the new service through Azure Marketplace.
I don't know.
So that was seen as a huge win. Of course, Larry Ellison is one that is very powerful in all things tech, and he is the co-founder and long-standing chairman of Oracle. But bridging that relationship with Microsoft, two names that are very, very influential in the overall AI world as well.
I think this is a pretty interesting note, not only for what they have to say from both the macro to the micro in these stocks. We talked about this on Morning Trade Live at the opening bell, Jenny. I like the approach. So again, you don't have to agree necessarily with the logic, which is the sort of overarching tech opinion and then applied to individual tech names and individual stories. But I like the start macro and then find how that applies to each one of these companies. I think that's a solid fundamental approach to assessing the landscape of things. But most importantly about Oracle in particular, this is a stock that delivered strong results. It had just run up and saw its valuation swell so much that it couldn't reach that high bar that had been set by the market. It then was repriced post earnings. but it really hasn't gone lower after that initial pop lower. So we really just see a new price regime underway here. I think this is the first step of it. We haven't seen analysts jumping ship. They may be adjusted price targets for the most part, but if they liked it going in, they still like it now, and that's basically generally been the case. And it sounds like that's the case at HSBC as well.
And very similar to what we actually heard from Adobe, because Adobe also did report objectively pretty strong results. We did see some weakness after, but Adobe had also been on a 65% run into their earnings event. Oracle was up 55%. So we're just seeing these bars set so high for these companies, it seems like it's impossible for
There's a new low on the day for SPY.
to please these street analysts that are covering
Now it's time to
them.
play some poker.
We'll be diving more
Have some
into our
patience on these
food focused
contracts.
names today. We'll be looking at Shake Shack as well as DoorDash. For our upvotes, we'll be zooming in on some technicals as well as key example trades coming up next.
If you're in the server, then you're in it. You don't need to get invited or anything. You just have to open up the app on your phone and click on the server. If it's the only server you're in, then pretty straightforward. Just go to general, throw chat. You have something to share. That's like media related. There's a media tab. If you have any DD from Reddit or something you write up your own, you share that under DD. And then any trades you enter or exit, you share under trades. All right, I'm closing. I'm here. 25%. Don't know what this line's from, but I have it for some reason. Extended hours. It's coming down a little more here. This is setting me up in a tough, tight spot. It's similar to what happened yesterday, but I was way more behind today. It caused me to take the contracts off early, quickly, because I've been red all day and just now flipped like break even or green. So I'm trying to be patient with it. I have buying power still though, so I need to factor that in because I can get back in on nice little bounces or whatever. I want the order position. Do need to consider that. But I'm trying to trade the charts, not trade your P&L. Nice, Baba. No runners? You didn't leave any runners? What the heck? What was all that talk about? 443 or what were you saying? Holding for 443.69. That's just a meme number? You didn't leave anything to keep going? No scaling, in or out? I wasn't able to scale into these puts because I was holding calls. So I flipped. Otherwise I would have been scaling into puts. I didn't have anything out there. Well, maybe not actually, I don't know. But I'm definitely gonna try and scale out. There's new lows. I'll sell another one right here. I guess if you only have one contract, you can't really scale. If you want to be able to scale and you're only buying one contract, you can just always I don't recommend buying for that money, but just buy one more strike out of the money so you can have more than one. Closed one more. I believe this flipped green, that's insane.
Yesterday's close, even after starting upward notably here. So we can see that this downtrend is still in play as well, this white dashed line here. We had a nice move up after earnings in May, took us all the way up to those yearly highs, but we were not able to break above them there. So that's what kind of started this downward trend that we've been seeing here that's been taking place more recently. One interesting thing about this chart, we have some very clear volume nodes, some clear areas of heavy trading that line up reasonably well with some levels that stuck out on our chart. First, we have the 61 level. That's about where we topped out here. Then we had a large breakout from beyond that point, and once we managed to clear above it again, happened to be about where we bottomed out yesterday and the day before as well. So then we can also see 65 level, an area of consolidation around here, and then the 70 level, a frequent topping point for price and some consolidation as well there, Jenny.
Now, just based on my very baseline level of charts here, Rick, I can just tell momentum not looking too hot.
Yeah, that's true. You know, it started to get bad around this point here. You can see that we were bouncing around a little bit. Then once again, the break that we had below our support levels here roughly coincided with that big push below the 50 midline here. Now we've crossed into the oversold area. This is typically regarded as a sign of further weakness to come. We've also made new relative lows here as price also sunk to new lows. So pretty much any way you slice it,
another one there.
is pretty firmly tilted toward the bearish side of the situation based on this indicator.
Okay, and last but not least, what key price levels are you watching here, just given some of this recent selling?
Well, like I said, we've got some volume nodes to kind of help us here, and some key price levels that I had noted on this chart. Around the 61 level, like I said,
flush through that level.
One point to watch. That's the closest point to the downside. The kind of overall trend right now is more
interesting
toward the downside, so perhaps we'll start looking at that level first. So around 61, if we start getting below there, 57.10 would be the next area to watch, because that's about where we hit the lows after we had our gap up from earnings during May. So
Very
that would be
interesting.
a key point to hold there. To the upside, our purple 250 two-day EMA is the mark to beat today. Not looking too likely that we'll get above that point, but you never know. Things could turn around. Beyond that, 65 and then 70 are the 2 points to watch.
All right, 65, 70 to the upside, perhaps hoping for some reversal in this recent downtrend. We'll leave it there. Great breakdown on both of these names, Rick Ducat, our chart master. So now, Alex, when trading this name, just given the fact that Shake Shack has seen a more significant pullback than a name like DoorDash in the last couple of weeks and months, like Rick just laid out, walk us through now perhaps a more optimistic or slightly more optimistic example trade than, say, Shake Shack.
Yeah, if you recall, the North Coast analyst Jim Sanderson had an upgrade from neutral to buy today. So we're outsourcing that logic to that particular person in this case. We're looking at a bullish trade in Shake Shack in which we're going to buy a 60-65 call vertical. This is one strike in the money, one strike out of the money, seeking to accomplish a couple things that we always have for our loose guidelines on this type of strategy, which is equal risk to reward. You're going to see 250 and 250 here for a $2.50 debit on this $5 wide spread, and a break even close to the current share price. You find that break even by adding 250 to 60, and you get to 62.50. And the stock has pulled back a little bit intraday. It's about 61.90, 61.95 right now, but still relatively in that ballpark for the break even. Risk is to the downside. This thing falls below 60. You have $250 in risk. Of course, we talked about that break even. And as it moves higher, above 65, which was one of the resistance points rather that Rick had highlighted, that's the max profit scenario, $250 as well. Neither accounting for transaction fees, but Jenny, a bullish strategy, also customizable, and one looking for a test of that resistance point that Rick highlighted.
No doubt about it, and as we know from this note from North Coast, pretty positive on Shake Shack here, despite some of this name's weakness, at least today and, of course, this week. But that does it for this segment. Now, coming up next, it's time for FOMO. So we are looking at all things autos, specifically the impact of this UAW strike and how we could see actually Tesla emerge as a potential beneficiary. Shares are up, pacing to close out their third straight gain session, also up 11% this week.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Could have kept some more, but oh well. Green is green. Did you buy more, Bubba? Is that what you're saying? Sold and bought more? On this downtrend? That's crazy. Excuse me. I might even catch the bounce play by end of day. Be fun. Bought more? Yep. GME up 0.3 now. AMC hold up. VWAP 1%. What are we looking at? Mullen? Mullen's pretty good. There's a new flushy flush on SPY. A lot of stuff's getting pulled down. Runs down 3.5 now. Well, we had a good close in the Theta Farm earlier today. Etsy's down 3.75. Down 3.6. Alright, first little bounce there on SPY. Might be closing out this last one. Next move down.
A positive for Tesla. Look, Tesla is going to be largely unaffected by this, and that's huge for Tesla. It's going to be more the other companies come out weaker. Tesla kind of comes out the same. I kind of see it as a false equivalency, though, to look at this in the EV world between Ford and Tesla. Look, even if Ford had all of their cars as all electric as choices, I'm not sure that the customer of Tesla is the same customer who's looking at a Ford Escape or some other car that Ford makes, the F-150, for example. They're just not the same consumer. So I look at this, and if you're in the price camp and you make enough to go buy a new Tesla, or a Tesla from the last few years, you're not really the same person that's looking at Ford vehicles. So the big question is going to be what this deal looks like on the other side for some of these companies, what they do to continue to stay relevant and competitive in this space going forward. But we've said all along, if Tesla's being priced as a car company, it's way overvalued. It's not. It's being priced as a tech company, and then you have to think about, okay, what kind of tech company is it? It's also inventing things in the battery space. It has investments into solar. it is not just the vehicles we see driving on the street.
I think that's exactly what I was going to say, and I think that's such a good point because, you know, we make the argument that with its valuation, I think the bulls of this name say it's not an auto company, it's not a pure play into the automotive industry. So then for that reason, can we really say that they're going to benefit from a pure play automotive headwind? I don't necessarily think you could make that same argument because, like you said, Alex, sort of different veins of business at this point. So for those that argue this isn't a car company, then I don't necessarily think that they can benefit from the pure play car company's weakness. I mean, the name like Ford, GM trade nowhere near the same multiple as Tesla. Their performance on a year-to-date basis is not even comparable at this point. Tesla, though, is up 124% this year. They've pulled back about 12% from their highs, which is a much better position than they were in about a week and a half ago, even with this nice jump this week, up 171% from their low. Tesla's a frequent flyer on this show because it sees such great volume. It always has news. We mentioned relatively light, actually, new Tesla news today, but this name just sees such outstanding interest from so many traders and investors, and even with today's slight move to the downside, it's always a fun one to look at here. So when trading this name, walk us through sort of what you're thinking, given the fact that we have seen this nice rally this week, but still well off those 52-week highs.
Yeah, Tesla's struggled to break through 300 to the upside. That seems to be the battleground price level for this name to the upside. You look back to the summer and fall months of last year. It spent a lot of time in that area, failing to meaningfully break above it. It tested that level after its last earnings and failed to break above it. If you're optimistic on Tesla, that to me seems to be the level that investors would be focused on from a resistance standpoint to the upside. And so I looked at a strategy, Jenny, that would basically seek a retest of that level. So
I hope in your new strategy you've incorporated risk management.
What would drive it there? The fear of missing out on Tesla seemingly is always to the upside.
Change your strategy.
A retest of that.
Any strategy will work if it has
a call calendar,
risk management, stop losses, and
October monthly.
Not holding and hoping.
Basically a month from today. Today is the September monthly expiration. And then the November monthly options we're going to go ahead and use as the long anchor of this particular call calendar spread. So it's a little bit more expensive. We're talking about a little bit bigger product when we talk about Tesla. You know, $275 stock that trades with a little bit higher implied volatility. And also it's a longer dated calendar spread going out month over month, 2 months out in time to November. It's going to be a $5 debit. That's going to be $500 in risk on this one. And you can see because of that little bit longer time associated with this compared to the calendar spread that we looked at in DoorDash, it's a little bit less aggressive of a vertical peak on that particular mountain-like risk profile. And so 300 is still the apex of profitability, but a little bit wider net maybe cast around that price. Because this stock currently trades below 300, it is a bullish strategy. We're wanting a test of 300, but just like we said in the put calendar example, it can overshoot in both directions. So it can go up too far, and of course, if it doesn't go up at all or even moves lower, that would be risk in both directions for this one. So $500 in risk. One looking for a retest of 300 over the next month and a half or so in Tesla.
The one thing I will say is that when looking at Tesla, they have reduced their prices all year long. So if we see any sort of price increase from the Detroit 3, that would put Tesla in an interesting position. But again, to your point, I find them difficult to compare, but they have continued to reduce their costs. Well, it does seem like there's whispers we could see some pricing increases if this strike does go on longer than anticipated. So really interesting.
Not going to get a second leg down there on SPY, just straight up rip.
Which is the third best performer still.
A lot of value in this last contract.
Year. But that does it for FOMO. Now coming up next, it's time to look at Planet Fitness, which did touch new 52-week lows.
Huge drop on Planet Fitness.
On some leadership shakeup. Renita Young will have more on that story for us coming up next.
Wow. all in below VWAP. Wow, look at that. Alright, I'm gonna close this call. Or this put. Hold on. Steady. Yeah, I'm closing it. I'm not gonna get calls way too far from the bottom now. That's crazy. Crazy. Found the buyers. Dang, that one contract had a lot of value. I was riding on it.
Role, and then he's going to be nominated to be reelected on the board at the company's 2024 annual meeting. That was a part of his separation agreement. So big shock to everybody involved and not involved.
So what's interesting about this name, you mentioned we're well off of the yearly high at around $90 a share, all-time high just shy of $100. It wasn't like this was a pandemic winter, right? Because everyone was home, no one was going to gyms. So it's sort of like with this weakness here, I mean, are people just not going to gyms? It's sort of confusing to me because you'd think that right now with the reopening of the economy and the reopening of so many offices, shouldn't a name like Planet Fitness be benefiting?
It is one of the fastest growing gyms in America, certainly publicly traded, right? But I have anecdotally just seen a bigger move to the boutique gyms. People want that personal attention. They don't want to be a part of a huge operation anymore. So yeah, or people who are even doing the online workouts with gyms virtually. I did that for a few months.
I was going to say, it seems there's been a bunch of consolidation in this space too. Like I could just say anecdotally in you know my hometown driving around, there's less and less big box gyms with different brands. It's like 2 of the brands survived and they just have all the different locations now. And you have to wonder, I mean, Planet Fitness is still one of these ones standing. You'd have thought that would be beneficial, but maybe some of those trends that we're seeing on a individual basis, finding more boutique, class-oriented locations, that's weighed on a kind of traditional, Planet Fitness style gym.
Right, it's no longer about the huge Planet, it's about the small community gyms, right? But Planet Fitness says they've got some tricks up their sleeves. This move was a part of their whole next phase, so we'll find out what they have coming up.
I also think classes have made this huge splash in the overall fitness world, but classes, I will say, they're not cheap. So we were just talking about the resumption of student loans could affect 14 to 19% of your discretionary spending. Planet Fitness is very affordable, which is sort of their shtick. I mean, how much, do you even recall how much you were paying? Because it's the cheapest gym in Chicago by a mile.
It was like $10 a month if you just were at one gym, but I think it was $20 if you wanted to be able to go to any of the partner gyms in the country. So that's very cheap.
That is very cheap. And I'm not like a gym snob, so I'm like, that sounds great to me. I mean, that signed me up at that point. But interesting move to the downside here, taking out new 52-week lows. It's down around 15% now in real time, but we will leave it there. Really great breakdown, Renita Young, on what is a negative story for Planet Fitness, but perhaps we could see some turnaround with some new leadership overall. Now, coming up next, it's time for Under 30. So we are talking about another name that's expected to IPO next week. That is Instacart, as we are seeing some updated numbers ahead of that IPO. George Tillis will have more on that story for us coming up next.
That bounce. Crazy. Pocket fives, dang it. Got lucky on that. Finally a little pullback after that massive bounce. Alright, here we go. Queen 9 of hearts? Of course you get a queen. Oh my gosh. So lucky. Stupid all in.
Let's get nuts!
Let's get nuts. Ah, pizza party Friday. Thanks, Guts. Friday pizza party. We were totally gonna have pizza too. Get a 9? I think I'm gonna use the profits from the day and get some calls. Kind of push it a little bit. I'll wait for opportune time. What happened to all the all-ins? I don't want clubs to get there. Min bet. Ugh. I keep slow playing this. If clubs come, I'll be kind of bummed. A 4 would be nice. Two of diamonds, that's perfect. I don't know why did my strength of my hand go down? This dude folded, he didn't even check. Pocket king. I couldn't get any value on that one, that's stupid. Alright, I'm getting one call here. Might get another one if it gets cheap enough. I got 2 pair there. With clubs out there? Crap, I should have raised. A nice slow play, but if he has clubs. Nice. Did I just slow play it? Yeah. Raise me up. No, you checked. Oh, you had 2 pair also. Why the heck did you min raise? Oh, trying to maybe catch me from not playing or something. Holy squall. Wally. Guts, where are you gonna get your pizza for Friday pizza party? Bubba's never late to the party. Party doesn't start till he gets there. Everybody knows that.
I think that again is something to consider here with this.
You hear that squall?
IPO. You know, I think the market is in transition from a macro perspective. I think, you know, considering we're, you know, near the peak terminal rate for our cycle, you know, the questions are what's next? Is the economy going to roll over? Is it going to continue? Is there going to be more fiscal stimulus in some capacity, et cetera? So there's a lot of things going on from a macro standpoint, seasonal standpoint, and so forth. And even volatility, you know, volatility was low back in July. And if you look back in July, there was a lot of declines in major.
I slowed everyone down with my slow playing. Everyone's playing way more conservative now.
AI-based stocks, which actually fell on really good news, and that's kind of telling as well. I'm going to throw in
Seems
Nvidia,
like, at least.
Adobe, for instance, is also.
Yeah, I'll just have one
good
call.
news. So
I'm not gonna get another one.
Environments are a little bit tepid right now. There's
Happy
probably
with
less
that.
risk appetite in general because the market is
Hold it till
relatively weak, at least
maybe end
in
of
the near
day.
term. But I think overall, in the next couple of quarters, as Instacart, you know, initiates their IPO, issues secondary, insiders start selling, and of course,
Holy
a couple
crap.
of reporting periods might actually find some foundational price action in the stock. So I think this was an interesting one because of the profitability profile of the business.
Yeah, and George, I think that's such a good point because with this
Oh
idea,
my gosh.
it's a well-established company already. I mean, we have
Oh,
the balance sheet
no.
off of, like you laid out, in a company that's been around for
Oh
quite some
no,
time
my
in
house
this
is falling
overall
apart.
delivery space, for what have you. But we will leave it there. Really great breakdown. We'll obviously be watching Instacart once it goes public, expected on Tuesday next week. George Tillis, senior markets correspondent here for the network. Have a wonderful weekend. That also does it for Alex and myself for Next Gen Investing for the week. Coming up next, we have the watch list with Nicole Petalides.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free.
Okay, sorry guys. It's still early, it's only 2 o'clock. Okay.
And the Jeep Wrangler. So the union is pushing for 40% pay increases, more time off, cost of living adjustments, shorter work weeks, and end of temporary workers. The automakers have come back with different proposals for wage increases of roughly 20%, altered profit sharing, bonuses, enhanced vacation and family leave benefits. But so far, they haven't been able to reach a deal. UAW President Sean
It's too early. I closed out of that call.
We're going to be out here until we get our share of economic justice, and it doesn't matter how long it takes. And I
Could have
think
helped us
that's the
puts.
big
Look at that
question.
thing.
How long could this potentially take?
Some soft volatility.
Shares of GM, Ford, and Stellantis, they're all
Oh,
actually higher today.
Peter Piper
Ford
Pizza.
Basically, it was lower
Domino's Bacon Ranch.
Percent higher. Now it's basically flat, but Stellantis.
Is that the chicken one? That one's actually pretty good.
GM up 1.2%. So not weighing on shares right now. I was talking on Fast Market. It could be because it's only 3 plants. It's not the most profitable cars that are made at those plants. Only 13,000 employees, but it could also be that it's baked in to the stock price at these levels. And in fact, just a few days ago, we had a UBS analyst say that he thinks that people should buy any weakness that we do see in Ford and GM, upgrading them to buy. Because
Oh, squall broke my house.
That for the suppliers, 4 weeks of a strike at each of the major automakers is already priced into the stock. So 4 weeks, let's see. We don't actually know how long this could take. But I think the headline grabber, of course, is Dan Ives over at Wedbush, who said, the clear winner in this Game of Thrones battle between the UAW and Ford GM is Musk and Tesla, with champagne now on ice.
Yeah.
Because, they're non-union and not participating in these strikes.
And don't have to deal with this. And it's my understanding, too, Stellantis with, they have Jeep and Ram and Chrysler, that they have the most inventory too, as to back up. GM has the least, then Ford, then Stellantis. So, I mean, they're a little bit more set as far as the inventory to get those things out.
But there's also the potential that they've already signaled that they could shut down plants. So their strike could actually last longer because that the union is not going to be supportive of shutting down plants. So I did see some speculation that the strike for Stellantis could extend even further than Ford and GM.
Yeah. Oh, boy. And then what about Taiwan Semi? I saw some delays.
Oh, market's volatile. That's that quad witching probably.
We're seeing chips
lots of adjustments.
Across the board actually lower today, and it's due in large part to this report that Taiwan Semiconductor told its suppliers.
Lots of hedging. It can carry off into next week though, since you have T+2, so could see a lot of it today, but didn't have to. Could really
about
be
demand
next week.
from its customers. Of course, Taiwan Semi is a key supplier to so many of the companies that we know. Like Apple, it makes the main processors inside the iPhones, Qualcomm, AMD, NVIDIA. It really dominates the markets for the high-end chips. We already know back in July, Taiwan Semi cut its outlook for the year, forecasting a 10% drop in revenue because of a worse-than-expected deterioration in the non-AI market, outside of AI, and a weaker-than-expected recovery in China. So if you take a look, Taiwan Semi share is off about 2.4% today, but NVIDIA down another 3.5%, now down about 11% this month. AMD off more than 4%, Applied Materials off almost 5%, and KLA 10 Core off almost 5%. I will say the only even ARM, which is not a chip maker, it's a chip designer, was holding on to gains, but ARM has turned negative. So I was initially seeing it add to, but it's actually basically flat. So compared to the weakness that we're seeing across the board with some of these other names, it's actually holding up pretty well.
And still holding that IPO price of, what was it, $51, right? I mean, pretty amazing. All right, Carolyn Woods, thank you for all of that. Good to see you, Caroline. Now let's take a look at the bigger picture. Alexander Reed, Chief Investment Officer at Visage Wealth. Thank you for being with us, Alex. Tell us more, Alexander, about what you're thinking when it comes to the market. You think the Fed should actually raise rates. Do you think that should be in September or in November, and why?
Yeah, thanks for having
Just fold
me.
the dice king.
We think the market and the economic data is really telling us that we're in a late cycle reacceleration of the economy. And it kind of sets us up for an interesting setup for next week into the Fed meeting. Right now, the Fed Fund Futures pricing in a 4% probability of a rate hike next week.
That was a good fold.
And we've heard consistently from Jerome Powell over the years is we're going to be
everyone had aces.
Data dependent. And when we look at the data over the last 3 months, it's very hard to find any data that would suggest a rate
I'm gonna have a beverage with that pizza now.
I gotta. We look at crude oil up 28% in the last 3 months. The U.S. dollar is up 4%, which is a big move for big
crazy. Just falls out of nowhere.
The highest level since 2007. We've seen real rates the highest level since 2009. Consumer confidence is improving. Unemployment claims continue to cool off. Unemployment insurance claims continue to cool off. Retail sales accelerating on a 3-month basis. We see durable goods orders kind of reaccelerating as well. Look at energy or sector performance.
These min bets.
Energy communication, consumer, financial, those are all cyclicals from a sector perspective, outperforming over the last 3 months. That's all indicative to us to say
What does he have?
that
Full house?
the economy is not decelerating and flirting with an immediate
Nothing
recession. In fact,
fell, but-
that would all suggest that we're kind of seeing this mini
got a
reacceleration. So we think the Fed's in a tough spot.
big, like a
where,
huge sunshade,
there's a lot of
like sail
pontification
thing.
around from pundits and economists alike saying, we see progress from CPI, which we have. We
Big
continue to
sunshade,
see,
you know.
Core,
And
super
it's-
core CPI
I have
continue
it
to make progress there. We've
mounted
actually seen
to
headline
my-
inflation reaccelerate for the last 3 months in a row. And we think it's just too
siding
early
on
for
my
the Fed
roof.
to start talking
And
or hinting
like it's
at
windy.
at a dovish pace.
Massive
They
sail.
really need to see the whites of their
Just
eyes.
ripped off trim on
And
my roof.
Again, taking Jerome Powell for his word, the data would suggest that there's a higher probability of the economy reaccelerating. Over
So
the
yeah,
last 3 months
broke the wood
and slowing down to below
trim,
trend growth.
whatever
is
it's
what
called,
their
the wood
target
trim,
is,
and then
before
all
we
the
see
like
them
fascia
kind of
and like
pausing and
siding. I have
hinting
to.
at a rate.
That might not be
cut.
broken. I can maybe just
So,
put it back
we
once I
always think it's
replace
funny
fix the
hearing,
wood.
especially of recently, because inflation has come down,
Sucks.
that the Fed will pause and we expect rate cuts next year. And if the economy is reaccelerating and doing well with the risk-free rate at 5.5%, we find it very difficult to explain or give a reason why the Fed should cut rates, other than just because inflation is back down to 2%.
So let's talk about your investment strategy. That being said, you have certain sectors that you think are better to overweight at this time. Where would that be?
Yes, we continue to like high quality technology. Specifically, healthcare we think is a strong sector overweight. Last time we were on, we talked about a short-term tactical overweight to energy. We think that has more legs to it.
GME finding that resistance
we
again.
try to keep in mind at this point, as I said at the
It's
beginning,
coming down. Yeah, that was just a pump, a liquidity pump for the Bears.
So a late cycle, you can
It's a
have
big
some
one, man.
starts of growth.
Got me.
And so for us, we think the probability of a recession is still out there. It's just been the can's been kicked down the road. So in the meantime, we're starting to see some better trends within the energy sector from a price leadership volume perspective. So we think that is an attractive tactical play on a sector perspective. But from a factor perspective, quality, low volatility from the factor perspective. And then from fixed income, we like municipal bonds, investment grade bonds over high yield, but trying to keep our duration 4 to 7 years. The Barclays Ag and many private wealth advisors benchmarks are 6 to 7 year duration on fixed income products. We think it's more prudent to be 4 to 7 years, shorter than the benchmark, because we think that inflation, economic activity is going to be elevated, and so with that, bond volatility can stay high. So we want to kind of keep duration in check, but up in quality for the time being.
Yeah. Tell me about Europe and China. I mean, where do they, if we're still running hot so much so that you think the Fed should raise rates, what do you think about what's going on abroad?
GME about to go red.
Right. So internationally, we tend to like
let's
India,
trade,
Japan as kind of our international overweights right now.
Eighties
away
on
from,
Tesla or something.
Developed Europe, UK, and China specifically. The data over there is much creates a much higher probability of a recession, especially in the Eurozone. We see industrial production, business climate surveys, especially in Germany, really starting to roll over here. The UK, you could argue, is already in a recession. And China has
what are good ones? What are liquid ones? AMD.
Real estate fronts coming into play. They just cut rates, and they saw the market sell off. That's something that you see when there's more volatility in the domestic economy. So we're trying to stay away from an underweight China, developed Europe, and for any international exposure, leaning into specifically India and Japan, where we see economic activity actually accelerating. Across a backdrop of consumer demand as well. So you don't have as many headwinds in those developed countries versus what we're seeing in that
it's still there. You just have to
clearly
fix it.
Decelerating momentum growth in developed Europe.
All right. Thank you so much. Great to see you, Alexander Reed. Glad you were on with us today, giving us the scenarios and ways to overweight and how to get into this market from Visage Wealth. Thank you. Coming up next, two names in the energy space that you might want to consider. The potential upside for Pioneer Natural Resources and UGI. We'll explain. Stay with us. We'll be right back.
I remember when I first started flying.
Keep getting kicked. Alright, I got puts back up here a little bit. Might be time to close them right here though. I'm just using my buying power that I have, or my, just for my profits. That makes sense. Selling one right there. See if we can get a retest of this wick, maybe even a new low. Still pretty early, we still have an hour and 45 minutes. Wow, wow, wee wow. Just all in. See if anybody calls. Do it. Do it. Do it. Do it. I'm just a bluffer and then I bail. No one? I think I will. Dang it. Do it, do it, do it, do it. A little head and shoulders here. Could just chop really into the end of the day. 215. Yeah, I might not see a continuation at all in any direction.
The price target to $93 from $110. DoorDash also said late yesterday it will transfer its listing to the NASDAQ from the New York Stock Exchange. Nucor shares are down after it issued weak
Mullen coming down here a little bit.
Third quarter. Company expects earnings for its steel mills segment to decline on lower pricing and volumes, It also expects a decline in steel products segment. Nucor is also a big supplier for GM. And an earnings beat was just not enough to rally those shares of Adobe. Analysts are calling its fourth quarter guidance good, but not impressive. Company indicated AI price hikes would take longer than expected to show up on its bottom line. Its shares still up more than 55%.
BS up 4.5.
I'll tell you, both my guests today,
Slowly but
Chris
surely.
McMahon and also Dan Romanoff, both liked Adobe. And Bitcoin
Little by little.
26,455. All right, have you been seeing some concerts this summer? Pretty much everybody I know has been to a concert.
10.5% still on ACB.
People love to get outside all summer long. Taylor Swift, Beyonce tours have certainly made headlines. A little bit of social
Gets more
media.
folds.
We're looking at ways investors can approach such a popular live event and the situation of music, right? Maybe you want to look at this as an investor. Dave Shaloff's with us, founder, CEO, Music LLC. Recently had this beautiful write-up in Barron's, right? The minute I saw it, I said, up in a prominent place because people are paying attention. MUSQ. Welcome back to the
Nice.
show.
You had nothing over that high card?
Thank you so much for having me
Okay.
back here today.
So you've been doing
I thought I was bluffing on that all in, I bet.
more and more interest
That's
in
good.
MUSQ, music, your ETF. What do you tell them?
Well, first of all, we're very excited about this product, MUSQ. We just launched, 2 months ago. We already have $10 million of inflows into the fund.
Blasphemy.
We have 10 to 15,000
Trying
shares
to
on
catch a
average
bluff though with the
traded
high card.
every
I mean, that's pretty
this
risky.
fund captures the growth and innovation of the entire global music industry. Captures streaming,
We need an 8.
content, live music and ticketing, equipment technology, satellite and radio. This summer was obviously an incredible summer for live music. Folks coming out of the pandemic were revenge spending. I call it funflation.
Revenge spending.
Funflation and the
Revenge
evolution of the
traveling. Why is
superfan.
everyone so
The
angry? Always
superfan
having
really
to get
wanted to
revenge.
get out and see live music this summer. You had exciting shows from Elton John to Taylor Swift to Beyonce, Harry Styles, Ed Sheeran. So live music is happening. People want it. It's disruption proof, right? People don't want virtual shows. They don't want to watch concerts on TV. They want to see their favorite fan. And obviously, who can ignore the success that Taylor Swift and Beyonce have had?
It's unbelievable. Yeah.
Both artists are just incredible. I mean, Beyonce originally she announced 52 shows. Now she's doing 146. She's going all the way through 2024. It's unbelievable. Taylor Swift is going through 2024. Beyonce is going through the rest of this year, and fans are paying up for these tickets. Fans are, Beyonce's charging like $700 on average for a ticket. Taylor Swift is charging like $50 to $500 with packages, VIP packages going up to $1,000.
Yeah.
So. Fans have pricing power. They have experiential desires. They want to take videos of themselves at these shows. They want to promote themselves on TikTok.
Still a chance
live
there.
Music has just been, incredible.
Open our
for
babies and our
fans.
granddaughters. Very nice.
Incredible for obviously live music companies like Live Nation,
Bitty bitty bye.
Eventum, Madison Square
Great
Garden,
book.
Sphere, Vivid Seats. All these companies are in our fund. So
And that's what
MUSQ
we have-
captures all the growth and excitement around live music, and of course all the other
Not quite what I was looking
categories too.
for.
And you were a music executive yourself many years, so you're fully informed on how this works
Trips.
and where the money comes in and how it goes out. And as an investor now, you're looking at some of these names like Sony, like Live Nation. I don't know if Madison Square Garden is in there as well, but you also have names like Google and Amazon and Apple. Where do those fit into the music industry, and why are they in MUSQ?
So streaming is a top category.
We've heard from this
35%
guy
of the
before.
companies in our fund are streaming companies. Obviously, the number one in terms of paid subscribers is Spotify, but and they have 200 million paid subscribers.
Is that in the fund?
And that's in the fund, clearly. And then after we have Spotify, and then we have Apple, Amazon, Google, because together they represent the second, third, and fourth largest player. But we also have other companies like Click Digital. We have Kakao in South Korea. We have Genie Corp. We have Tencent.
I like
we
this
have
little head
Cloud
and shoulders
Music,
here. I might
we
even
have
grab another
Live One.
put.
We have 11 streaming companies in our fund. So those big names are capped at 7%. It would be unfair to exclude them from the fund because they are a really important part of the music business.
Wait.
YouTube
It was
is an
straight
important part of the
bet.
music business. How do you ignore Google?
Little small
How do you
play, I
ignore
guess. No diamonds?
All the big companies, Apple. How do you can't? So I had to include them, and I think we've created a very
No one raised. Ah, diamonds got there too.
diversified basket of holdings. We have 48 companies in this fund.
This sucks.
We have 22
They're raised.
content companies, all the big names, Universal, Warner Music Group, but also the smaller royalty trusts like Reservoir and Hypnosis.
Flush beats is straight, right?
Companies in our fund. We have companies
Yeah,
like
I'll
him
risk
you've
it.
never heard of before. They're a huge
May have the
fund.
higher
They're a
19.
huge company in Taiwan.
Hey, he
We
probably
have
has a
companies like
queen.
Avex
Whatever.
in Japan. So we have small players and big players.
Who's helping you
What the heck?
to decipher
Oh, was there
what
straight
needs
out
to
there?
be
We both
in
had
the
it?
fund or out of the fund? And
In
if
pocket
something
sixes?
is big in music,
They're
but
raised
the
sooner.
balance sheet looks like it's the pits, does that get to stay in?
So we've already defined the we've defined.
How does
the
that
rules
work
for
if
this
we both
fund.
have
Okay,
it?
This is a passively managed fund.
Or if it's out there,
this
but I have it
fund
also in my
tracks
hand.
the performance of global
Just
music companies worldwide. The way we've defined
cancels out,
eligibility
and it's
is
like
that
high card?
every music company. Every company
Why do we split
that is
that?
eligible has to derive more than 50% of its revenues from music, or they have to be a top 5 player in streaming content, live music, ticketing, equipment, or technology. And no company can be smaller than $100 million in market cap, and it has to have daily trading liquidity of $500,000.
Yeah, hit a pair of
What
sixes.
that does is it
I don't
gives
get
you a diverse selection of companies, small cap, mid cap, and large cap companies. They're all market cap weighted, and as I said, the big name, no single company can be more than 7% weighted in this fund. So obviously the big names don't outweigh the fund.
What do you do
Oh,
when
no, no, no.
Google and Amazon and Apple
Isn't
keep
that
growing in price?
Cage of Apes?
You just cut down the
It
number
gets
of shares.
rebalanced
Let
every
me get one more
quarter.
put.
The number of shares so that you don't go
That's
over
right.
that
It cuts down.
7%.
So
What did I
you
just
see
do?
it spike up a little bit, and then when it gets
Just bought a call,
rebalanced, it gets
never mind.
rebalanced quarterly. It gets back down. So that's a common question
Gotta pay attention.
that comes up for investors. But the answer is you're getting like all the music companies. You have to include these companies. They're big players. You cannot get exposure to music just by buying
there.
the triple cubes, right? Or just by buying these companies. There are too many other companies.
Theoretically, there could be some that are
Oh,
falling
no, 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 no.
behind. They may get more than 50% of their revenues from music, and they may be over $100 million in value, and they may be somewhat heavily traded, but they could be burning cash left and right, and it could be a laggard. I mean, but that still gets in, right?
If it's a lagger again, so if the trading volume falls down between 200,000 to 500,000, it actually gets a half weight on the index. So if it's smaller than $100 million market cap, and if the trading volume falls between 500,000, then it gets a half weight. Below 200,000, then you're off the index.
He's
You
got
can't
quite the
be on
formula.
it. But we wanted to include the small cap companies to really
F-F-I-E
give them
coming
an
down.
opportunity to grow, for
ACB
investors
holding.
to get exposure to them. Everyone knows the big names. Everyone knows Sony.
Come on,
and
Spy.
Warner's, but you don't know, the 40 other names. And what's great is this fund, 45% of the
Maybe let it
companies
shake
are
me out of the
domestic,
puts. I was just
55% are
thought it'd come
foreign. They
back.
have
I didn't think it would.
exposure. Yeah.
That was a full on. It's too early in the day. That's the thing. This happened at like 1:45. That should have been my sign. This is not end of the day rally. It's not a power hour rally. This is not market getting back to some safety of VWAP or whatever.
To spend even more. So do you see that coming? I mean, are you already seeing that happening?
Let me tell you something. Music today
We
is
should get a
the
nice
most
bounce, I think, by the end of the day.
underhyped, undervalued media company out there, and that's
There's
not
plenty
just
of
me
time.
saying
That can
that.
happen in the last
That's
10 minutes.
JP Morgan.
We could be
For
down at
$11 a
442
month,
and we
you're
could
getting
rip back up to
$150
VWAP,
million,
especially on quad
150
witching.
million songs, okay? Spotify.
I guess it's not like a ETF
that's
rebalancing. Those days are crazy.
45% of what Netflix is charging with very little churn. So the industry is actually going to 146 billion by 2030. JP Morgan just revised their forecasts, and I think price hikes are coming along for Spotify to raise another. And what does that do? You raise it by $1. It's got 200 million paid subscribers. That's $200 million of incremental revenue a month. It's $2.5 billion a year just for Spotify alone by raising it $1. So I think we can expect price hikes to continue to go up with very little churn. People love music. People want exposure to music. It's so cheap. Music is cheap compared to all the other streaming services. Even the valuations of these companies are cheap. They're a third of like AI.
And what about and we have to go, but I think about other ways. Like there's movies that are related to music, like All About Elvis now, and Taylor Swift's going to be making the
Dish really turned around.
movie, and there are.
I guess it was pretty
shows
flat
and
today
music
anyways.
About music, like Neil Diamond's, I just went to that play. A beautiful noise. So I mean, there's music's everywhere.
Music's everywhere. Music's everywhere. I produced Clive Davis's film, The Soundtrack of Our Lives. That's a #1 music documentary on Netflix. Taylor Swift is.
So much fun. Okay.
Yeah, Nicole, we could go on and on about music. Thanks for having me today.
Thank you for being here.
Wow, this guy's slick, man. He's cutting it off with Nicole.
Music, MUSQ. That is the ETF.
Been a pleasure, Nicole. Thank you. I've got to go.
All right, coming up next, looking at
He felt the end coming up. He's like, I'm ending it.
about natural resources and UGI coming up.
Bought 3 Tesla, 1 ARM. That's good, man. Have a plan. Have an exit plan.
You know that tech stock we talked about?
Where would you cut losses? Where would you take profits? If it's a trade. All right, 230. 442.5. Let's see, 442.64. Yeah, I like to take profits on at this next support on the SPY. Probably was a big winner. Was it? Who keeps doing this? Look at all these raise, right? Pocket pair, huh? Waiting for the all in. Stupid. Yep. Egg everybody's. One of them probably has pocket pair, the other two probably have nothing. Min raise, nice. Buy's coming down a little bit. They're a little flush. None of them landed anything on this flop, I bet. Another club comes out, I would have won. Pocket tens, pocket aces, there you go. Yippee. Shoot, did I just check? Wait. Just checked, I think. Dang it. Meant to raise, but it wasn't an option yet, so I just called any. I think that's also a check. Ooh. Another spade or a 10. It's a risky call. Risky? He's got 20 million. The heck? Folded? He's looking for spades also. Bull run next week. After the witching. It just looks choppy. Very range bound and choppy. Build the gap to downside here, so maybe we fill this upside gap next. Man, I should have looked at the time when I was closing that. Look at that put. Could have just ripped like that, but that early in the day, it's not ready for that kind of move without it coming back down some. Not the right face card. Or the right suit. Mm-hmm. I'm selling one of these puts. Just hold one. One is fun. Good morning to Mill. Thanks, I did actually want to know that.
Be influenced by the government, right? Or perhaps opposite. The more government tightens restrictions on drilling places, that actually improves the value of the Permian. And Pioneer, you get paid double digits while you wait for oil to go up. And, you know, you never know when Exxon or someone's going to come along and just pay a big old price for them, which will give it probably another 50% premium.
Yeah, and then we have UGI in the world of utilities. Your thoughts there?
Yeah, I think that's a less risky stock to pick. You know, that company's been paying dividends for, I don't know, 100 years. It always pays
Yeah, end of day
dividends.
chop
It's got
maybe.
a nice little 4-some-odd% yield to it. It's got a great position, owns gas utilities and pipelines in West Virginia and
All that
Pennsylvania.
volatility gets you hyped to trade, and then
You know, it's not
that
going
was
to go
it.
down as much if we go into a recession or stocks fall off here, and you get paid a nice dividend. It's a very strong company, and yet it's still got some upside, and it's got some nice growth projections in its revenue.
All right. Thank you so much, Dory Wiley. Wonderful to see you. Really appreciate you being on the show today and giving us your picks as well. Thanks, Dory. CEO, Commerce Street Capital. Still ahead, we're going to be looking at the crypto market and put that in focus, and a new professional designation in blockchain.
What? There are 2 spades out there, but whatever. Alright, we break this level, I'm gonna close this call, or this put. There's a jack. All the spades got there, dang it. I got an ace of spade? Wait, what? Were there not 4 spades out there? Must not have been. Let's see. GME's still green. Just. Mullins come down quite a bit. It's up 8% now. ACB kind of double bottomed. It's up 12. Yeah, I'm just closing the put there. What's up with that 8? That dude went all in? Oh my gosh. Ah, it folded. Tried to go all in. Oh well. Another heart came out. Man, that really got ugly fast. He probably has an 8. You're so smart. That one day. We practicing good risk management on Wednesday? So, looks like maybe a double bottom here. Shoot, meant to raise. Min raise. The risk to reward is much better to the upside this point in the day, with the SPY being down over 1%. Only an hour and a half left. Quad witching. You see what I'm getting at here? Yeah, I got some calls. Back in them. Yeah, I like that. Ooh. Oh, all in. ACP back to VWAP. I think they're gonna be nuts into close. I don't know. Always a possibility with these quad witchings. Very well could just chop and consolidate through here as well. Saying I don't see much downside from here compared to side. Pocket sixes going strong. Oh, should I slow play it? Nah, already been barreling. Hope they don't have an ace. Oh, dang it. That's gotta be an ace. Oh, I guess I had a full house. I didn't even think about that. Clubs missed. I was thinking I had trips. I forgot there was a pair out there.
In order to be able to access Bitcoin for their clients. We all know why. ETFs are the most popular investment vehicle there is. They're low cost, they're high transparency, high liquidity. It's a way to access this asset class. People love the gold ETF, a great way to access gold. We use REITs for accessing real estate. We use ETFs for commodities and options trading. It's a simple, easy way to gain access to the asset class compared to the cumbersome nature of crypto in other formats. So we are fully expecting that when the SEC does finally say yes, and we think it'll be sooner rather than later, it could be a couple of weeks, it could be a couple of months, that the SEC finally says yes, there will be a massive amount of interest by advisors. It could be hundreds of millions of dollars that flow into this asset class, and that would be great news for the price of Bitcoin.
And you do think that it's happening sooner rather
Six,
than later.
your jack,
So this year,
your diamonds.
would that be fair? to say?
An ace will work.
I think so.
Eight
I
will
wouldn't even be
work.
surprised if it was as early as next week, to be honest with you. I mean, we don't know what the SEC is going to do, but it could be very quick. They have lost the lawsuit against Grayscale. They lost the lawsuit against Ripple. They're probably going to
That's
lose their
definitely a
lawsuit
dud
against
for us.
Coinbase. And so
I'll check it.
everybody's angry at Gary Gensler. Congress is angry. The media
Tens.
is angry. The financial services
Yeah,
industry
check
is
that
angry.
one.
He's not acting in a rational way. The U.S. is losing its dominance and its leadership in the crypto space. Other countries and other continents are moving ahead in Europe and Australia, Japan, Great Britain, Canada.
Guess I could have
And it's
raised
silly
more
for the
on
SEC to be taking the posture that it's taking.
the
And
flop.
what's ironic about this,
You
Nicole,
can't get people to
is
fold
that
when you're
Gary
just
Gensler
playing for
claims
fun.
that he's trying to protect investors, but his actions are actually harming investors. Because in the absence of an ETF, investors don't have access to advice from an advisor. They're going on their own, searching the internet, and that's why they're getting caught up in frauds and scams. The existence of the ETF would actually improve consumer protection, and everybody except Gary Gensler seems to get that.
Well, you certainly have a lot of
That
passion
GG
about
guy.
this, and that's what makes you guys
Hmm.
right in the right place, because now you're announcing that the
I
Financial
like it.
Regulatory
I don't like it.
Authority now lists
Good fold. Shut up.
DACFP as professional
Idiot. You don't know if that's a good
designation. And
fold.
what's interesting with that is I think a lot of folks they get nervous about investing in crypto. They don't know how to go about it or get advice on it. And this is a good certificate in blockchain and digital assets for folks to learn more, to see more, and have more conversations, right?
Yeah, I appreciate that. Yeah, we're very excited that FINRA is now listing our CBDA, the Certified in Blockchain and Digital Assets, as a professional designation, right alongside the CFP and the CFA. We're very excited about it. It does reflect that FINRA gets it, that this is a new asset class, and this course is a world-class faculty. Scott Stornetta, who's the co-inventor of blockchain, is on the faculty. Anders Brownworth from the Boston Fed, and among others. And this is an online self-study course that gives you the knowledge you need to understand
PCB up above
what is
VWAP.
Bitcoin, what is Ethereum,
Nice.
what is blockchain, how does it work, what's the investment thesis, how do I integrate
What's
it
my
into
name?
my portfolio, how do I explain it to clients. The course
How
is
do I
really,
spell it?
really popular. Over thousands of advisors from 37 countries have already enrolled in the program. And we've struck a deal with Schwab where we are the official crypto education partner. And we are now offering a 50% discount on the tuition when you enroll in the course, which you can do online at dacfp.com.
Oh, that's good to know. Thank you
for
all
that.
of that. And in your opinion, I know you can't necessarily recommend Bitcoin or recommend too much, but is
AMC
it
up
the type of thing in a
1.6.
diversified portfolio? People, because there's a lot of people who are just really wary of Bitcoin altogether. Would you
and
say
I don't
people
really
should
care.
have Bitcoin?
Yeah, I don't
GME
really
still
care whether
holding the
people
green.
like it or don't like it, buy it or don't buy it. I think you're right, Nicole. It's all about understanding it. You know, advisors have very strong opinions about annuities. You love them or you hate them. You use them or you
Quickly,
don't.
she said.
But you understand
That's Schwab, man. They run a tight
you know
schedule.
the difference between the beneficiary
Quickly.
and the owner. You understand the difference between fixed and variable. You understand
Oh, ACB.
how annuities work, the fees and the taxes. I'm simply saying you should have similar knowledge about crypto so that you can better advise your client whether or not they ought to buy it. One of the most popular courses I teach is called How to Build Your Practice by Hating Bitcoin. It has nothing to do with buying it. It has everything to do with understanding it. And those who do want to integrate it into a diversified portfolio, 1 or 2 or 3% allocation is plenty to check the box, fill the need, and move on. So it doesn't need to be scary. But like everything else, things you don't know about tend to be scary. And that's why we encourage you to learn about it. Our sole goal is
I gotta
education.
call that, I think,
It's an
yeah.
unbiased, objective course. There are no product sponsors engaged. It is strictly education in an academic environment through online videos. And it'll give you the knowledge you need so you can figure out how to talk about this with your clients.
All right, Rick Edelman, thank you so much. Founder, Digital Assets Council.
Ooh, a lot of calls on there.
Thank you
Jeez.
for all that. Still ahead, our panel is ready to talk all about consumer sentiment. The consumer is
Do it.
still going
All
strong.
in. Let's see it.
So what do we need to know, and what big shifts towards experiences over physical goods?
Okay.
What does this mean for the retail sector
Go
as we
for
go
it.
closer to the holidays? Coming up.
Here we go. Oh, snap. That's the lower end of the straight.
Young lady who was mid-30s, a couple of kids. Recently,
Hopefully someone doesn't have the higher end. That person probably does. Dang it. They have a full house too? Yeah, I was gonna say. Full house will get it. Mm-hmm. There's too many people for that river. Too many. You're welcome. He said shut up. Totally tilting. Before is out there. Fly's coming up a little bit. Oh, got 2 calls. Yes. Probably have high cards. Just another 7. Fours. 6 A's. Bad all in. Problem with cash games is just run out of patience. It's like, when do you leave? It's never over. If ACB can retest those highs. $10 to power hour. The 2 buy-ins I've just blown through. Yes. He says thanks. He says shut up.
We are seeing that these consumers are funding their spending much more from a debt basis, and there's some nervousness about that. Loan delinquencies are up close to the
Red Kindle here on SPY.
rates per the St. Louis
Still in
Fed.
the
Student loan
chop.
payments are kicking in October.
Big Red Kindle on SPY.
So that means consumers will have on average $503 less per month to spend on whatever else it is, but we continue to see the same signs that they're spending on experiences and personal transformation and less on
Personal
physical goods.
transformation? What does that even
I
mean?
think companies and categories that are in the right ones will be
Like
able to
Botox?
benefit, and the others will not.
And so, Tom, what do you make of it, and how do you interpret it for the stock market? Is it retail? Is it something else? What did you look at? What stood out to you?
Well, I would echo a lot of the statements. I do definitely consumers are still in a strong place. I would just say, I would nuance that I think spending on growth or on goods is not really growing, but it's not really falling, while spending on services, which includes experiences and the like, is growing. And so I think that slowdown in growth has allowed inflation to improve, which I do think will ultimately improve consumer sentiment. Now, in terms of the stock market, we're more worried about what it means for margins. A lot of consumer-based companies have been able to grow their margins substantially through price increases that have outpaced the increase in costs. If costs sort of catch up a little bit here and squeezes margins, I'm not sure that's priced into certain consumer discretionary companies in particular.
as we translate this and what we're seeing, Eddie, your thoughts, because I know you have autos, you have retail, you have banks, how this all translates. Tell me a few thoughts.
Yeah, no, I mean, the categories that have the strong tailwinds are going to have pricing power, and that, as Tom says, is going to help with margins for sure. So international travel demand is at a 46-year-old high, with 22% of U.S. consumers wanting to travel to a foreign country in the next 6 months. Per BCG, consumers are spending up to $40 billion on medical aesthetics in 27, which is up from $16 billion in 2017. So that category is going to grow 10%. And you know, I think one of the key things that we're finding in the physical goods space is not only is there pricing pressure, the ability to take price up
still playing them
is
now?
gone, but you're seeing a lot of
Well,
other
clubs
pressure,
got there, I guess.
not only from retail sales being down at Target and Kroger and Home Depot in July and August, but
We folded. He was
theft
bluffing.
issue and shoplifting
Maybe
is
not.
becoming a
Maybe
real
had
thing.
tens or a 10.
Total theft from retail in 2022 was estimated to be about $100 billion. Target is saying merchandise theft will rob shareholders of $500 million in earnings. And so retail margins are already thin as it is. If the theft continues to make the shopping experience more unpleasant for the regular shoppers, while trying to prevent basically the razor thin margins from going away, you're going to just see a lot less of a pleasant experience to shop, and that'll affect goods. And then you're going to see more and more retailers going bankrupt like they are now.
And you talked about
Combine that with them forcing higher wages.
And they were very comfortable spending, but
Bad look.
The disposable income that they have is dwindling. They're digging into the savings. They don't have that much money left over. You know,
They can just go steal.
Spend around, and
No one's stopping them.
Loan payments. You know, you still are going to have to pay those back. Final thoughts, Tom.
Yeah, I mean, I do think there's been a tailwind of kind of credit card utilization normalization. Credit card utilization plunged during the pandemic and started coming back in 21 into 22, and now it's probably close to a normal pace. And so consumers have been able to outspend their income growth for a year and a half or so, and that's not going to continue. They're going to only be able to really spend their income growth. And then, Nicole, as you mentioned,
BFS 5%. This is the way.
I wouldn't call it a game changer. It's probably something like 0.3% of spending is going to get sucked up into student loan payments based on our estimation, which is not nothing. It's not a total game changer, but it's just another headwind on top of that kind of lack of kind of debt normalization and or savings normalization. That was sort of a tailwind for consumer spending. So I think all this means that consumer spending, it can keep growing. It's just going to keep growing at more of an income kind of pace, which is great news for inflation, but might not be great news for every consumer discretionary company.
Okay. Tom Graff, Fawcett Wealth, Eddie Yoon, thank you both so much for being with us. I really appreciate it. Good to see you, everybody. I hope you have a beautiful weekend.
Getting ready for Power Hour.
Keep it right
Maybe.
Here. Oliver Rennick, Market on Close, next.
Bouncing back up here. Candles are getting pretty big. Okay. Same. And? Oh, Jack 8 maybe? You say I love big cannons? What? Bad position to raise, everyone has to go back through. By climbing up a bit. Queens out there? No, negative. Actually got one through. Just call this one down, won't raise it. To power hour. Here we go, 30 seconds. You guys had a good week, a good Friday. Thank you for your likes. We've got 19 on the board. Went really red on SPY, back to little green. Now we're just having fun with our profits from the day. For a little end of day call. See if we move back up to some safety areas. There's power hour.
Good afternoon and welcome to Market on Close. I'm Oliver Rennick. We have 1 hour left in the day and in the week. It's Friday, we're almost there. Stocks are under some pressure right now. We're giving back yesterday's gain. That's kind of been the case here. It's basically a step forward and a step back pretty much for the stock market this week as the Russell 2000 and the NASDAQ are both down. We had seen a little bit of difference between those two small caps and the tech giants, but they are aligning to the downside here. And now over the last 5 days, the S&P 500 basically neutral. Technically, we're actually going to be down a little bit on the week right now if we don't get a bounce into the close. We gapped up Monday morning, Sunday night into around the 4,500 range for the S&P, so we're right back there. A little bit of a tough run here, considering that there were really no negative events. But the stock market's having trouble taking that next leg higher. Still better scenario, of course, than downside, neutral going sideways. Not the worst situation you could ask for. But the fact that we have seen cracks forming in some of the big tech trades without any real major negative catalysts does suggest perhaps the market's a little bit exhausted in terms of valuations and the huge run-up over the past 11 months. We got a good show coming up this afternoon. We'll be talking a lot of macro, of course, ahead of next week's FOMC decision. We'll also be talking with AOL co-founder Steve Case about where he's looking for tech innovation across the country. So we'll have some fun convos here heading into the closing bell, and our big picture Schwab panel will get you set up for next week. Look at ARM today, giving back some of the bounce and the success around yesterday's debut, but not too much. I do think that is fairly encouraging for
There's a pretty big red candle on SPY.
That IPO went smoothly, and that the downside here is limited to 1% in ARM. We certainly have seen more drama in IPOs over the past decade for big tech companies. So overall, went well. Market digested it. Even though there's only about $5 billion afloat trading in the public markets, it still is a big company with a very high valuation. So this certainly could have gone awry, and it didn't. It went smoothly, but it also didn't really inject a lot of fresh upside into the key chip-making sector. If you look at SMH, the semiconductor ETF, we're down sizably today, a 3.5% drop. That is an ugly candle. It's one of the biggest we've seen here over the past couple months, and clearly demonstrating the sideways nature of the market generally over the last 5 months now. We got the high in this group following NVIDIA's big blockbuster report, not this quarter, but the previous one. That's the gap up in the screen you see since May. This is a 6-month chart, so you're including really the big AI liftoff.
Oh, no hearts, no straight.
A bit. Obviously, there is a difference between reversal and consolidation.
Yeah, you got it with your A's.
This is what you describe as consolidation.
We're
Certainly
straight.
could find some support back at those May levels for chips, but better sooner than later for bulls, given how important this group is. And again, the fact that there really has not been any negative news. We've just kind of seen a little bit of exhaustion. Case in point, look at some of the big tech trades of the last 2 weeks. Apple breaking down around the report of Chinese restrictions to iPhone buying, but then this week, a report countering that one, and the shares in Apple didn't bounce back. Of course, there's implications there for chip makers in that world. Then you saw Oracle drop on its report, despite numbers being fine. Same situation for Adobe after its numbers. Same situation for Netflix, which gave an update earlier this week on its own strategy. Nothing really new there. Shares slipped anyway. So when you have the major mega cap giants dropping on really no negative news, it implies that the market has very high, perhaps too high expectations
We'll slow
to
it down a
fill in
little
these
bit.
valuations that have come so far.
Diamonds
We're
wouldn't be
gonna get the
good,
macro
but
situation into next week real fast. Want to look at bonds and crude oil. There is
Oh,
more
boy.
conviction in this trade, I think. There's more directionality. There's been a little bit of a battle in the bond market this
Nice,
week, and it
nice,
looks like
nice.
once again bears are going to win out as treasuries
Guess
are
there could be
selling
a
off
straight
again
out there
today.
now.
And as far as crude goes, there's no disputing the trend here. WTI is breaking out. You cannot keep crude
Nice,
down
the
right
slow
now.
worked.
Market is
He was
trying
bluffing.
to stop this rally, but
A lot of
it's
bluffs.
not working. Crude oil's up again today, and the dollar remains firm. A little bit of softness in the greenback today,
The slow
but this
play
very
worked on
important
the
chart
sevens.
shows the dollar and the 2-year yield both near year-to-date highs, so close. But again here, just like bears in the stock market have not been able to push prices down, the bears in the bond market have not been able to send that 2-year above its 1-year high, and the bulls in the dollar still have another level to get through to also achieve a new year-to-date high. So if you view this chart as basically the market indicating tightness ahead from policy for the Fed, next week suddenly looks very, very important. Even though the market is saying there's not going to be a hike next week, the fact that the dollar and 2-year yields are sitting very comfortably right at the year-to-date high
Gotta have a 10, right?
does suggest we should get some fireworks. Let's bring in Kevin Hanks, Renita Young. Let's talk about the market here ahead of
Would've been a
closing
good
down
bluff.
about an hour. Renita's in studio and Kev's on the line. So, Kev, we're kind of treading water here, you know, ending basically where we started the week. It's not a loss. It's not a big win for bears, but it certainly is not a victory for bulls this week either.
Yeah, if you look at a very short-term chart, it looks like we lost all of yesterday, right? Yesterday was an incredibly strong day for the market. Today we just gave it all back. And so we're right
coming
back to
down
those
here a
levels
bit.
where we were 2 days ago, late Wednesday. And Oliver, next week is going to be important, even though I think it's all agreed on that we're not going to get any movement from the FOMC. But here's what we will get that will be very important. We're going to get new dot plots from the members of the Fed, and they're going to basically give us a roadmap, at least for the next 6 to 9 months. Maybe they're going to tell us where they see rates and where these projected rate cuts out in the future, where they see them, or if they don't see them, which is what we expect to see more than anything. I think the 20th in the afternoon, we're going to get as much information as we can get without getting any movement from the FOMC. So I think Joel Ball's comments are always very important, and the actions of the FOMC with their dot plots will be very important. It'll be slow for overall earnings data, no major data to talk about, but boy, the Fed there's going to be a lot to talk about, and we're going to get a couple days or maybe some new rhetoric coming in the autos. They'll probably make some headlines over the weekend. They'll be working the talk show, circuit for sure over the weekend. That rhetoric will get loud and probably more loud. So you'll see some news there. Again, a lot of the auto stocks have kind of already made the move that they're going to make, and some of them are starting to actually recover now. So listen, I think this is a disappointing end of the week. even crude oil or even the energy stocks, with crude making new highs up to $91, energy stocks are even down today, Oliver. So this is a market that shows all the signs of pure valuation fatigue. I think you summed it up nice. Look at Adobe. That earnings report in terms of numbers was blockbuster, and the stock couldn't rally.
Yeah, fatigue, I like that's a good word too. A little malaise. Tell us about the numbers here, Anita, for those that are catching up here going into the final session, because again, these weren't bad numbers, but the stock is down. We basically had two major earnings over the last 48 hours. Lennar, Adobe, and they're both down. So I guess it's no surprise the market's down.
Better than expected earnings, better than expected revenue. In fact, revenue was at a record for the quarter for Adobe. And this was all thanks to the huge AI boost and the rise of price, the rise in the cost of subscriptions during the quarter as well. While some people say that the fourth quarter projections were in line with estimates, some say that they're showing that there's going to be little growth sequentially. And that, along with the greater tech sector weighing on Adobe today, could be what's bringing it down. But the stock is still really strong, you know, as the company continues to explore AI and how much more it can add it into the business. It's up more than 55% year to date. And it's not too far from its intraday highs, and it's gotten several price targets today. So at least analysts, they're still looking at this stock singularly, not necessarily what's happening in the greater market today.
Yeah, we are at least able to hold on to the long-term trend in these as hope of more to come on some of those AI themes that were so powerful in getting us to where we are. That's where it's kind of, you can pick your story. You can go, okay, short term, bears salivate at a 5% drop, but bulls go, you know, big deal. If I bought this a year ago, I'm extraordinarily happy with still a 40% plus run. How about Lennar? Let's talk housing, because this is one that's actually gained even more than Adobe over the past year. And we all know housing has been the rock of the economy, especially the new home sales from companies like Lennar.
Oh yeah, they've been benefiting from the tight supply, the high demand, the high interest rates. All that came through the earnings report, right? Better than expected earnings and revenue. But sales and profit numbers, also margins, they were lower than the year before. And one way that that came through is because home building revenue shrank, thanks to the company saying that average sales per home declined year over year.
Okay.
And that may be a telltale for some people as they look out to the rest of it. Another thing to consider, right, when we talk about offline, when we hear more about the student loan debt repayment starting back, I often hear the rhetoric that it's one of the #1 killers of home ownership. You know, I hear that from a lot of different people, how student loan debt really hurts people from being able to buy a home.
There's a big fear that that's going to have a major impact on the economy in the rest of the year.
Absolutely. If you can't pay your mortgage because you've got to pay a student loan payment every month, then that will absolutely have an impact.
Anything on the margin that kind of tightens up the economy here. But again, another number that didn't miss the top line, right? And we know that prices have generally come down. It's that the volume and the scale should be there. But at this point, it's like you got to hit every part of the earnings perfectly. Guidance, margin, and the actual revenue for the market to reward you for it. Down 3%, not as much as Adobe, but still showing some fatigue, as Kev put it there. Good word. Thanks, guys. Nice wrap here. The earnings dragging on the market today. Renee Young and Kevin Hanks. Let's bring in Al Lord, who is zeroed in on the real estate market. He's the founder and CEO of Lexard Capital Management, joining us from the New York Stock Exchange. So, Al, it does seem like a lot of this market has sort of run out of steam somewhat. Are we just taking a break before the next wave? Are we waiting to figure out what the Fed does? Maybe not next week, but next month or the one after?
Definitely. I mean, all eyes are on the Fed. And, you know, unfortunately for the real estate market, the financing market is effectively shut. I mean, it's just having a profound effect. Transaction volumes are down over 50%. Commercial mortgage originations down over 50%. The small and regional lenders originations down over 70%. And everyone's just waiting for the market to stabilize and see what's going to happen. And you were talking earlier about the Fed dot plot. That, you know, obviously that gives some kind of picture into what's going to happen in the coming year. But the elephant in the room is the $1.5 trillion of commercial debt that is maturing over the next 2 years, and how's that going to get refinanced? That's going to be a huge problem. It's going to have to get refinanced in much higher rates with NOI mostly down. I mean, valuations are down, net operating income is trending down. This inflation world is hitting operating expenses. Insurance costs are way up. Property taxes are going up. It's a whirlwind of negative issues to deal with in the commercial real estate space.
Is the bargaining power on the tenants' side for the commercial real estate market? I mean, if you are a small business and you do want to have an office space, is it possible that some of the burden could be lessened on you if you negotiate well in a situation where a lot of vacancies are still lingering post-COVID? I mean, is there any positive spin there at all?
Well, there is positive spin if you're leasing and if you're leasing an office space, for instance, or perhaps retail space. On the other hand,
Freaking Hart's got there, dang it.
If you're trying to buy a home, as you were just talking about earlier,
Should raise quicker,
mortgage
more aggressive.
rates are and how difficult it is to get a mortgage and high prices to buy a house.
Hearts.
It's hard. If you are renting,
All right, I'll give you Hearts.
rents
Woo.
continue to increase.
Pair of nines.
given,
Slow play worked, but the Hearts.
And so it just
Hearts
it depends
stung.
on what piece of the real estate market you're talking about, but there's certainly going to be room to negotiate commercial and retail leases as we move forward here.
When should we know the effects and the damage of this refinancing? Because now 6 months ago, roughly, when the regional banks were coming under stress, the main
Nice call, nice call. Straight flush, look at that.
Next
No, that was
commercial
yeah,
real
straight
estate.
flush. Woo.
Yet,
Almost a
with
royal
this
flush.
kind of lingering, elephant in the room, credit spreads haven't blown out. Market's been doing fine in stocks. Employment's been solid. I mean, is this like we're all looking at something, hoping we don't go over the cliff and it's inevitable, or has it gotten priced in?
Well, that's a great point. It is surprising because, yeah, the economy has held up here, and a big part of that has been unemployment. I mean, you still have 1.4 jobs available for every unemployed person, and so unemployment rate has stayed low, and that's part of the Fed's issue here with raising rates. So, yeah. Absolutely, the shoe will drop on commercial real estate financing, and there is no doubt.
It's a big
come here. It's a question of how big it is and when it happens and what we can do, and a big part of that is what the Fed's going to do. How much longer will the Fed keep rates this high? When will they start easing, and when will the market start to stabilize? But there is more pain to come here, and it just depends on how big and when it comes.
How much of the blow
All in, I'll
could be
take it.
softened by a push to return to office? It's kind of strange, to still talk about this as the post-COVID world, but frankly,
I got so lucky.
Our timeline has
I got a straight in there.
scrunched a little bit, and it still feels.
Oh,
like
we both
everything
had
is
straights.
very
That was the high
recent.
card.
Because I'm reading headlines like every other day about
No, I had a
some
7.
big bank manager or various
Got
companies.
really lucky.
Even in the tech world too, they're saying
Person
our
slow
work
played me
from
well.
home abilities are capped. People need to start coming back in.
Was that
Is there a way to
3,
do the
4,
math
5?
on kind of what the pre-COVID?
I want to see it. 3, 4, 5.
rates
Was
were
it straight
versus
out there, and then or did I have a
say,
7
all
that
right, if we
connected
go
it?
back to something closer to pre-COVID
With
levels
the high
of
card.
office activity, could that soften the blow?
That's kind of like I usually go up against.
A little bit, but I think that
This player had trips.
have the message. Lessees,
Oh, that's great.
companies that are leasing space have gotten much smarter, and they realize they can do with less real estate. They can cut costs by giving back some space. It obviously depends on when the lease expires, but people are working smarter. It will certainly help to have more people in the office, but getting a 5-day, 100% workforce in the office is long gone. So yes, and back to office is improving. The numbers are trending up, but it's still a long-term negative for the necessary space. And part of it's technology. We have a very efficient technology system, obviously, that where you can zoom in and you don't need to be in the office. And with laptops and all the portable electronics,
Nice.
you don't need to be in the office. So a piece of that's never coming back.
Fair enough. Now, you guys generally focus on multifamily real estate. So if we kind of shift over to the residential side for a second, correct me if I'm wrong on that, but I know we've talked about that a lot in the past. How long can we keep this big gap between the potential stress of commercial real estate and the resilience of the residential?
Still up 4.5. That's not bad.
Well, it's a bifurcated
Oh,
market
AMC's
because
popping up a little
in the
bit.
long run, multifamily is going to continue to do extremely
What about
well.
VWAP's up
There's
3% now?
housing. There just aren't enough apartments and construction.
Whoa.
There's a big number of units coming on this year and early next
All in.
year, but that's going to level off. But we still are going to have a deficit. So
Mhm.
you know, that's certainly in
6
the
A's.
landlord's favor over
Ooh.
the long run. However, the issues in
Almost landed that
multifamily
6.
are all about financing. So it depends on when your mortgage comes due. And given how low we had cap rates over the last couple of years, there are a number of buyers that purchase new properties that put floating rate debt on. And you could do it for as low as 2.01% on a floating basis, interest only, with no hedge. And that, as those maturities come due, that refinancing number is much, much different when you have, you have 10-year fixed rates where they
overpair,
are,
come
and
on.
when you have a Fed that keeps raising rates.
No 10s,
So
no
it
kings.
really depends
I guess the 10
on
isn't.
what kind of financing. If you have long-term financing, you're in great shape. Now, you were talking earlier with your earlier guest about
Oh, now you
student
want to
loan
play
payments, and
muscle.
yeah, that's certainly going to hurt
Okay.
people as they have to pay more for make their student
I
loan
had
payments.
one hand.
And it's going to be harder to get
Okay.
a mortgage. And it's going to be harder
One
to
hand I did that
qualify. It's
with.
going to be less cash flow. So that's going to
You
help
beat me on
the
it.
multifamily space by keeping people in apartments for longer and hurting the
I
demand
gotta slow
for
play you, huh?
housing. And the other piece of that is the housing equation. And,
Do it.
and you
Do
see
it.
with a 30-year mortgage around 7.25%, that's been up 40 basis points over the last couple of months. That just
I'm going for the
forged
slow.
demand for
Put
new
me on in.
mortgages and for new house
Oh
purchases.
my goodness.
And then we've talked about this in the past. The supply of housing is just continues to be affected and limited, and you have maybe 3 months of
Hope he doesn't have a
housing
straight.
supply of inventory. There's not enough
Oh, he
inventory
gave it to
go
me.
around. So it's really a difficult environment to
Buy
operate
still
in.
chopping around.
Really like the details here.
320.
Very helpful for us to kind of separate where the strength is and where the weaknesses
No,
are. Why each is the way it is. Good convo and good
no
catch
witching
up.
action
Appreciate you
yet.
joining.
Great to be with you again.
All right, thanks, Al Lord from
All
Lexington
right,
Capital
all right.
Management.
Could have seen
All
the
right,
cards for
we're
free
gonna talk some
probably,
tech when we
but
come
I
back.
chose to raise.
We got a special guest joining us, co-founder of AOL.
Uh-huh.
The AOL.
You did too
Steve
small of a raise
Case
there, buddy.
Is on deck. We'll be right back.
I can't go all in there, dang it. Should have, but oh well. Don't have anything. Oh, hearts. I'm bleeding. Yes. We should fold. Ace. Ace is the place. It's gonna be all ins we can win. Three jack, ace six, let's do it. Three seven, dang it. Fold. Ah. King two. Yes. Call. Nice, I think. Oh, thought I almost had a straight there. The turntables. I'm not gonna start muscling him yet. He's actually chip leading still. Interesting. Okay, I could probably slow play him though. What a great hand I have there. Don't call it. Nice. Whew. Got to. Nice. No ace for you. The all-time comeback right here. Dang it. Wanted to all in it, but couldn't do it. These blinds are too big. I feel like I have to go all in. 600, 300. All right, let's do it. Pair of jacks. King. Oh. Hit the 7 on that hand before. 10 queen. Dang. Good game. Almost came back. I don't know how to play with those big of blinds. I think that's the way you play it. Just all in a bunch. I'm still chopping around here. 30 minutes to go. We might have a little 10-minute Fugazi move today. That'd be fun. Move back up to VWAP. I like.
Tend to be regulated industries like healthcare, financial services. So understanding the policy regulatory side is important. And Congress just passed $3 trillion.
Straight out of the gate.
Science Act, bipartisan infrastructure bill, Inflation Reduction Act. It's going to create enormous momentum in those industries. So for Revolution, we have the seed fund, venture fund, and the growth fund. The two big themes around place and policy.
How much of that specific geographic role that's being played in founding new tech companies is or was an effect of the COVID-driven migration out of major cities? Does that play a role in some of the opportunities rising elsewhere?
It's certainly acceleration. We started this effort a decade ago, obviously many years before the pandemic, and every year we've seen a steady
volume on
growth.
VFS.
Dallas yesterday, for example, was there 5 years ago for a Rise Plus tour, and Texas at the time was getting 2% of U.S. venture capital, all of Texas, so including Austin and Houston, Dallas, San Antonio. That's doubled in 5 years to 4%. We're seeing that happening in other places as people realize that some of these companies in attacking some of these traditional industries are advantaged in being in these cities, not just because there's lower cost of living, which is usually the case, but also because there's expertise around those particular sectors. We backed a company in Tennessee, for example, Chattanooga, called Freightways, that's doing a Bloomberg-like platform for the trucking
Get out of here.
industry. A lot of big trucking companies are in Chattanooga, so it's a good place to be. But certainly the pandemic was an accelerant. It kind of unbundled where you live and where you work, gave people more flexibility. Some people are even working remotely for tech companies in Silicon Valley, and that the fact that you have more of that flexibility in terms of where you live and how you work does advantage a lot of these rise of the rest companies.
Okay. Thinking about the themes that have been popular, some of them have had more lasting power these past 3 to 4 years. 2023 has been marked by the big AI gold rush, and it seems to already be bearing more fruit than some of the other hype cycles of metaverse or blockchain over the last couple of years. What to you is real? What's phony? What are you most excited about?
I agree. It's a big deal, and it's really been building for 4 decades.
Too much.
AI really
That's a
started
lot.
about the same time the internet started.
Oh,
and we all use it every day. It's embedded in applications we use every day. What's changed is AI sort of had its Netscape moment when Netscape arrived in the World Wide Web and companies like AOL. Suddenly, people were paying attention to the internet generative AI, particularly what's happened with ChatGPT, has been that moment, and there's now much more interest in the sector and investing in the sector. But we've been making investments in AI over the past decade, including in some of these rise of the red cities. One of the companies we backed, called Tempest, is using AI and genomics, a lot of technologies to more precisely diagnose disease. You're diagnosed with cancer, they can recommend a more precise kind of way to deal with it. Another company we backed, called Interactions, has been using AI for a decade to try to improve customer service. So it's been embedded in a lot of companies. What's now getting more of the attention are the language models and the broader platforms from some of the big tech companies that are giving people more of a sense of what might be possible in this new world.
And will there be limitations that you see from a policy or regulatory side? Just this week, we saw a bunch of the big leaders down in D.C. You mentioned policy earlier. Do you think right now it's clear what needs to be reined in from AI? Are there limitations that you expect to see from the government?
Well, Revolution is based in Washington, D.C. That gives us, I think, a little bit of advantage as we think about policy and investments. I do spend a good bit of time working on policy issues. I'm co-chairing the National Advisory Council on Innovation and Entrepreneurship, working on a national entrepreneurship strategy. I happened to have dinner a few nights ago with a number of senators who were at that AI kind of session with some big tech leaders, and they found it useful to better understand the issues. I think they're struggling with how much regulation is appropriate. The light touch in the early days of the internet probably is too little. The heavy touch that's been happening in Europe with the EU is probably too much. They're trying to figure out what's the right size of regulation and recognize it could end up being big tech getting bigger with some of those big platforms. It could end up being more of an open source model that's more distributed, which would allow more competition, but also create more risk in some areas like security and national competitiveness. So I'm glad that people are having that conversation. It's great that some of our top innovators in AI are now meeting with some of our top policymakers to figure out how to strike that balance, how to get all the terrific benefits of AI while also hedging against some of the potential risks.
Okay, so it sounds like this is the real deal from an actual product innovation standpoint. It's not going to come and go.
Well, as I said, it's already here. It's embedded in applications, Netflix, TikTok. A lot of people are using AI and have been for many years. It's something that we all use, even if we don't know it. And now we're seeing an acceleration of it as it impacts other industries, what's called the third wave of the internet industries. And because of the success of particularly ChatGPT and some of the other things that have emerged. So I think it's an exciting time. It's going to create a lot of opportunity for a lot of innovation, including in a lot of these rise of the rest cities in the middle of the country where there is strong industry expertise. So I'm excited about what's happening both on the place front and also on the policy front.
Thanks for sharing your views with us, Steve. Very interesting stuff and a very cool perspective. Appreciate you being here.
Thank you. Good to be with you.
Absolutely. Steve Case, Chairman and CEO at Revolution, co-founder of AOL and author of Rise of the Rest. Very cool look at how new geographies outside of the main coastal hotbeds of innovation are playing a major role in some of the tech breakthroughs right now. Give it a read. Coming up, Options Corner, we got two bearish trades and one.
Flushy on SPY. Still hold my lotto calls. I don't know, Jay. That 10 minutes Fugazi could be big today. Could rip. That's kind of the point of the lotto, though. Alright, small gains today. I was happy to do a little gambling on Friday. See if I can double or triple it. But yeah, it is definitely consolidating at this point. 15 minutes to close. I don't know if RC's in it. Gillied? Let's see.
This market does have a lot of legs under it. In this market, I'd be looking for pullbacks to try and jump in.
I like the levels you mentioned there, $100. It seems like we've got a couple stops on the way. There was a lot of trading around that $95 area or so. So I guess that might be a little bit of a tough spot to get through.
Yeah, I mean, you're going to run into some congestion there. You know, when you get to these whole numbers, 90, 95, 100, you typically see some congestion. And that is a high we saw. You know, the market initially hit that high and really sold off. That's kind of the spot that we were at. So, if I'm looking at this crude, anytime
we could always get a big move to the downside too in
it's a
today.
great spot to jump in, but there's a lot of
Down 1
momentum,
1/4. Wow, what an ugly witching.
Market. So, I like the upside here. I think if we can look a little bit farther out, I think we'll have a great finish to the year for crude.
You mentioned the EIA. I think that's important too because it seems like the crude bulls have been able to basically overpower any shred of bearish information. Is that just because generally the supply side has been cooperative for the most part? More stories about restrictions and cuts hanging on than anyone surprisingly dumping a bunch of oil onto the market?
Yeah, so the initial story with crude was the supply concerns from a few weeks back that really kind of started this, price action higher. Now, if you're looking at crude, we had OPEC extending cuts, the Saudis extending cuts, Russians extending cuts. So, you're seeing that story build up and you saw the momentum starting to build in. And even when the market was looking to cool off a little bit, buyers were really stepping in. And that's kind of been the case. Any support you're looking to identify in this market going out a little bit has been defended very well. And anytime you see that and we're consistently carving out higher highs and higher lows, that shows a good direction in the market to keep moving higher.
All right. Hey, I like your chart thoughts. Let's shift it over to a different asset real quick that I do find very interesting. It's gold, and it hasn't gotten a lot of attention. We've been super focused on tech and all the IPO stuff around ARM, and then commodities have been dominated by the crude conversation. Gold kind of finding some support, though, somewhere around this here. Not breaking out, not breaking down.
State of decay in the last few minutes is crazy.
Yeah, I'm glad you brought that up. That gold's an interesting one. And, going back to that chart aspect, looking at this chart on gold, it's kind of coming down into a tight little wedge here. And, if you're looking at like a 5-year average chart for gold, a lot of the time you do see gold in late, mid-September, early October, kind of carve out a little bit of a low. And then we start seeing prices moving a little bit higher. And, with the dollar and yields rising.
Maybe it would have worked if I had to wait until here to buy him.
1925, 1920
AMC up 3.4.
Continuing to push higher is showing some real strength. Now, with that said, we are still in a bit of a bearish trend, I think, overall for gold and for silver. So really, like 1969 is going to be a big level to kind of reverse that overall bearish trend to get us back to neutral, and then we can start building our ground from there.
Okay, so
yeah, they're just not getting any
value.
value.
A new year high in gold
also out of the money now.
Pulled up, maybe just about $20 or so more here. To get some strength
Need
building.
to be in the money.
Nice levels, good technical
when
thoughts,
the money.
Ryan. Thanks for the
money is mine.
comments. Appreciate it.
When the money.
Absolutely. Thanks for having me on.
Man, I said Ryan Gorman, Blue Line Futures. Let's talk some Mickey D's.
The money is mine.
Jenny Horn joins us for the fast food report. I guess.
All right, let's see what Fugazi give us.
3
minutes till.
Real quick though, Jenny, which is Discount Burger Day coming up.
We do. On Monday,
3.5% on AMC.
50-cent double cheeseburgers at McDonald's in honor of Cheeseburger
Day.
So actually, I was reading that you can get them for 1 cent at Wendy's, but that's, of course, a competitor. And we're focused on all things McDonald's here. So go get cheeseburgers on Monday because they'll be very cheap at various locations. But news we got today is that this franchisee group from McDonald's is responding to this California fast food bill, saying that this is a devastating financial blow. Now, the bill was first passed yesterday late in the evening, and now in the state Senate in California. Now it goes to the governor's desk, although he has sworn he will be signing that in. The biggest thing about this bill, I think that's the important takeaway, is it does include a wage floor of around $20 for California workers at fast food chains with at least 60 locations nationwide, starting on April 1st. So even in a state where minimum wage is around $15.50 an hour, the pay floor is even higher for some of these municipalities, which meaning the deal will have a significant raise for many of these McDonald's workers. Now, this National Owners Association, which is an independent advocacy group for around 1,000 McDonald's owners, are concerned with what it means really in an already difficult situation to operate in, given some of the labor shortages and given the levels of inflation. So they said that given the fact that they've been really, really avidly against this bill for the last year since it was first proposed, they think it could have an annual impact for each restaurant in the state of around $250,000 annually, saying that these costs can simply not be absorbed by the current business model. So this is all from an advocacy group, though. I want to point out, this is not McDonald's saying that their business model is like all of a sudden completely in shambles. And I did some interesting math because while McDonald's shares are lower today, I mean, the overall market is lower. It's not like we're seeing shares sell off per se. McDonald's only owns about 5% of its overall restaurants in the United States.
Getting a flush for
The
Fugazi.
near 13,500 locations are franchised. So if you look at all of those locations, 9% of those McDonald's are in California. So this is a substantial amount of its locations, no doubt. It's around 1,219. And if, like this association is saying, each restaurant took a $250,000 annual impact,
huge rips into
that
close.
amounts to around
What happened to that?
$305 million for McDonald's annually. Now, if you
Come on,
look
buy
at their
on close.
fiscal year in 2022, they reported around $23.2 billion in annual revenue. So that amounts for about 1.3%. That's it of their revenue. So I think that paints a better picture of like what this actually means in terms of McDonald's as a company. And no doubt, I can imagine this will be a difficult situation for these franchisees. But as McDonald's, as a massive, massive corporation, 1.3% hit at its worst to their revenue is what sort of, given the numbers that they laid out, I would say isn't something to be super concerned about.
Okay, like that next gen math. Shares down 2.5%.
Next Jenny math.
Market down 2 though, so maybe just a day for overreactions in general.
We'll pop there on GME.
When
AMC is up 3.5.
That's pretty strong.
Still looking nice.
I mean, there were a lot
kind of a trend line here on it.
That this is like completely
See if it continues to respect
like a
that.
major flaw with the business model. I mean,
barbecue, I don't really know. Kind of flat, more or less.
Anything that's going to be
I did get stopped out of FFI yesterday, unfortunately. Right there. So I missed this. Coming down a little bit, it's up 8.6. ACB play did not get stopped out of. Closed out of half of it up here. And I put a stop, break even on the rest, so locked in those profits. Did some stuff on the Theta Farm, closed some stuff out, took some profits. What else I did? Well, my SPY trades. I missed the morning, so I didn't catch any of that. I don't even know. I think I started going long like right here. Yeah, I started going long like here. And then I think I closed it. And then started again. Kind of want to review it now. Doesn't me review it.
I think the translation by the market is largely as expected, and so
barbecue kind of still exists.
A little bit, maybe in a bit
kind
of a wedge pattern here on the S&P 500 as we approach next Wednesday, and I think really it's going to be, what kind of message does the Fed want to convey to the market? Meaning, are they comfortable with the trajectory of inflation where it stands given these additional data points? I think on
one up 13.5 today. Nice little bounce there into close.
4,600 and 4,350 there in terms of the support and resistance level on the S&P 500.
Fugazi bounce sucks.
Scratching my head, I'm not sure why we're down so much today, but I would say maybe
5-finger slap to the upside.
Yields are higher on the 10-year, 4 basis points away from the cycle high. We had Adobe beat results, and they're selling off 4%. And then we had Taiwan Semi say they're delaying orders. So you put all that together into a mixing bowl, and maybe that's adding up to down 1.6% here.
Yeah, I started with.
Well said, though, with the witching. It could have said cauldron, maybe, Nate.
Oh, yes, there you go.
Missed an opportunity there. I think understated, underappreciated, and underreported probably were some of the Chinese data from this week. Michelle, tell us about the latest there, because it does seem like maybe things are starting to look up.
Yeah, we're seeing a little bit of a stabilization in China. We had the monthly numbers come out last night. Retail sales and industrial production.
Oh yeah, on
really
that
does
VWAP.
indicate some stabilization, and
calls
infrastructure
there.
spending could also start to pick
Closed
up, which
them
could keep that recovery going
here.
in the coming months.
So held those maybe too long. Or no, I didn't. Booked my support. Could have just done a stop loss. I decided to hold it till rip back up to kind of the top of that little channel. So closed them out here. Took a smaller loss.
We're saying that investors just may need to get used
And I
to
wasn't sure it was in a
slower
double bottom. That's why I held those. When typically I
Chinese
would just
and EM
close them, but I was
stocks,
unsure still. It was pretty early.
Sentiment there is very
Anyways,
low,
close them
and
out
they
here.
may not need a boom for a rally. but the
calls again
lasting rebound
right here.
in those stocks may need signs that this rebound is
That's right.
sustainable.
Why am I the contrarian today? I don't know.
Going to need signs
Another day
of
of
healing in the
contrarian.
property sector.
Average into them 1032 right here.
Natural healing happening in their economy, does that potentially
Bought
limit
another
the
one,
lengths of
1043 right
intervention
here.
that Chinese policymakers might go to in the coming
Bought
months?
more.
It's possible.
1052 somewhere on this candle.
Dole out some
And then bought more 1055. See what I'm saying here?
So far, it's
I was
just
buying
very
calls all
nascent.
through here. How did I end today green? Isn't that wild?
Sure that they hit the 5%
Bought calls all through
growth
here.
Target,
Stop buying calls.
of what happens.
Started
Nate,
selling
think about the potential
calls
wild card effects for
right
the market
here.
Generally,
Sold
crude oil,
some,
of course, has been
taking
one
small
of those,
losses on it.
as it's taken off. One of the few assets that's really got some clear direction
Sold
right
some more
now.
here.
With that said, for Michelle on China, do you think
Sold
that
some
is
more
potentially
here.
a catalyst for maybe knock-on
And
stress
then sold the rest and flipped to puts.
here if Chinese demand helps
I held
support
through all
this
this time.
WTI
They
move?
decayed actually a lot through there. 8 holding positions through the middle of the day.
I mean, look, we're trading at a forward PE
Sold the
of
rest and
on the
switched to puts here.
The risk-free
So it was that
rate is
drop
around
that brought my
5%,
account back
so
green.
that valuation is very hefty. So what do you need to happen
Flipping to puts.
in order to
It's hard to do. I'm
justify
like,
that multiple?
I'm down so
Where
much.
You're going to need earnings
But
growth. Well, look at oil.
just
That
went
is a
for it
tax
on the break
consumer,
here.
and by
Flipped to
extension,
puts.
it's a tax on corporate profits as they
And
take away
then-
from discretionary spend there.
Yeah,
And
then it
you
was
have
doing
the
good.
dollar, which is
Close
moving
those out.
up
I'll
as
just
well,
on the way down.
which is taking away from EPS on the multinational side. So then let's look for rates, because the other way that
And
you
then
get a
kind of gave
multiple
away some
to
in
be
here.
validated or to go,
But I still had buying
for the
power, which was
market to
weird.
go
I usually don't
higher,
have buying power
is
by
if
end
you
of
get
day.
that
So
risk-free rate to come down.
yeah,
A lot of the
I didn't have
economic
much gains,
strength
but
that
I'm
we're
just happy I'm
seeing
not
out there is
right on the day.
justifying higher for longer.
So then I got some
the higher we
calls
hang
for
around this 5%
YOLO for end of day,
risk-free
but
rate,
we didn't get
it
that
just
pump.
gets
So
tougher and
here we are.
to validate that 19 forward PE, because you have to believe that it's heading back.
Typically,
on
I don't like
its
to
way
average down.
Otherwise, you just look pretty expensive in the context of that.
But I thought we were going to reverse here,
One other thing
really.
before
So
we say goodbye,
I ended up cutting the
but,
losses here, and we
I love
didn't
to
fully
watch the
reverse, but just
dollar,
had
and
the
this week, the
had the bear flag built,
hiked rates, the
and
dollar
then
rallied
switching
right through it. Michelle, what do we make of that?
to everything.
Yeah, I
Saved
mean,
it.
the thoughts are that the ECB could be done, and there's a strong
All right,
case
I'll
for
take it.
ending rate hikes, not just in the language that was used yesterday, but also the economic outlook is deteriorating.
Green on the day, I'll take
Lagarde
it.
said something really interesting yesterday.
Green
She
week.
said that the transmission of monetary policy so far this cycle has been faster.
Could have stopped
than
out
in
sooner
previous
and then
cycles.
just
So
looked
the
for a short
implication
entry,
is that
but
additional rate hikes could threaten a hard landing there.
yeah, I don't
She
know.
did, hedge
I don't know
her
why I
bets
didn't.
that they could hike again, particularly because inflation is still too high, and their
I'm happy with
forecast
a
is
poorly
that they
traded
don't
green day, though.
hit the 2% target until the fourth
Better than a
quarter of
well-traded red day
2025.
because of revenge
But
trading and
given the
over trading.
economic risk, we think they're likely done, and the market
Right?
is
Something
likely
like
to
that.
shift. I'm wondering how long. rates stay
Yeah,
at
there
these
we are. Hope you guys had a good
elevated
week.
levels rather than if more
Have a good
rate hikes
weekend.
are coming.
Thanks,
And the
Christopher.
idea that they're done,
Thanks, Guts. Thanks,
did
Jay.
cause
Thanks,
the
Kitty.
euro to fall and therefore the dollar
Thanks,
to
Bubba.
rise.
Thanks, Gilly.
Right. Well said, both you guys. Thank you very much.
Thank you up.
For the thoughts here. Nice
Thanks, Dink.
recap
Thanks,
of events
Sergeant.
from this week and some implications
Happy weekend.
for
I have
next week
to
too. There with the
fix
central
my
bank
house.
divergences. Nate Peterson and Michelle Gibley.
Weekend work.
Coming up, our closers panel. We got Kevin Green
And
Ryan Woods.
yeah. See you guys on Discord and Twitter. On Twitter. Good weekend to you too, Kitty. Ending up on the week. Yeah, that's good. Happy with that close. GNS, ACP. That's good. All good things. Thanks, guys. Appreciate it. What do we do? What do we do? This lovely Friday. Oh, thanks for the dono. Guts, appreciate the support, man. Gonna go order my pie right now. 23 likes. Thanks, guys. That's awesome. Easy with the power tools. Yeah, easy. I mean, I don't need to use hammer and nails on this job. Nothing too powerful about it. Probably need to get some new wood. Want something stronger. Weird squall came out of nowhere. Squally. Alright, thanks guys, appreciate it. We'll see you on Discord, see you over the weekend.